This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Did you get the flowers for Lisa? Did you get?
I thought you were getting the flowers.
Roses! Happy Valentine's Day, everybody. I learned it was Valentine's Day yesterday at about 10 a.m.
Right, exactly.
I'm calling up the floor.
Plenty of time.
We're looking for the Saturday delivery. Good morning, everyone. We're all here today. Tom Keene, Paul Sweeney, back from Rest and Relaxation. Michael Barr is very in. And Lisa Mateo, on behalf of our entire team, the interns, all of our technical staff, happy Valentine's Day.
Thank you. I wore red for the occasion. You wore the red bow tie, so
Good.
there you go.
Does this mean the whole fam goes to Costco, or just here, Mom, you can go and
I can go
get
by
eggs.
myself. Yes,
get
thank
eggs
you.
while you can. We say good morning on your commute across the nation, and a day here, a little frigid here in New York. Here, I guess it's sort of still winter and all that, but an important day for us. We got retail sales here at 8:30. Ed Yardeni will be with us here in moments for an extended conversation. He's been looking at price change as being important. Red and green on the screen this morning. Paul, what do you see out there?
Yeah, Tom, I'd say a little bit of a red on the screen here. The S&P off about 8 points, and NASDAQ off about 43 points.
Yeah.
That 10-year Treasury yield, Tom, sitting at 4.53%. It's been sitting there for a long time.
Yeah.
Some people are saying you might see a 4.75. But a lot of folks are saying you might see 4.25 next few days.
What was the anecdote out to the west? Is booming economy?
Yeah, we were at Steamboat, Colorado, and the planes were packed, the hotels were packed, the lift lines were packed, so it was all good out there.
And the snow wasn't like cannon up in New Hampshire.
Fantastic snow out there.
February with 3 inches of ice.
No.
Let's do this right now from the Interactive Broker Studios, the Bloomberg Business Flash. Lisa Mateo.
Yeah, and we've got futures right now in the red. This is at the end of a week that was just packed with tariff talk, Ukraine peace efforts, a ton of earnings, and economic data. So let's start with NASDAQ futures. They're down about 0.2%, 45 points. Dow futures down 0.2%, 117 points. S&P futures down about 0.1%. We have the 2-year yield, 4.29%. Little change, and the yield on the 10-year, 4.53%, and that is little change. Luxury stocks, a bright spot in Europe. We have Hermes rallied to a record in Paris. Its holiday season sales surged. Checking out the Bloomberg Dollar Spot Index right now. It is little change. Go to earnings. Moderna recorded another quarterly loss. Vaccine sales, they fell. The company had an unexpected charge from a canceled manufacturing contract. On top of that, its shares are down about 4%. Airbnb, though, up 13%. It issued an upbeat forecast for the first 3 months of 2025. And Coinbase, they reported a surge in quarterly revenue and profit, but shares kind of taking a turn. They're now down about 1% after rallying 8% yesterday ahead of those results. And speaking of cryptocurrencies, Bitcoin, CNBC reporting GameStop reportedly considering investing in Bitcoin, other cryptocurrencies. Its shares are up 8%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Greatly appreciate it. Edward Yardeni needs no introduction. He is clearly one of the most philosophical and acute bulls out there. He speaks of the Roaring '20s and has been dead on. We're thrilled that Dr. Yardeni could join us for an extended conversation this morning. John Murphy, the giant of technical analysis, and a guy named Ed Hyman all agree, like you, that you have to meld things together. Talk to our audience that has missed the Yardeni bull market of how you use economics to have the confidence to invest.
Well, I think first and foremost, you have to start with the data. I think a lot of economists and strategists sometimes start out with the conclusion of how they think things will unfold and then look for the data that'll support it, especially the economists who tend to be on the pessimistic side about the U.S. economy. I think the important thing is to be observant. And I've observed over the past 3 years that we've had the most widely anticipated recession of all times that never happened. It was a no-show. And I think even now people aren't. It's kind of like Rodney Dangerfield. They're not giving the economy enough respect. It's amazingly resilient. And that's
what
that's
percentage of the audience doesn't know who Rodney Dangerfield
right,
is?
exactly.
You're dating himself. He was in Caddyshack. We'll leave it at that. Ed Yardeni, the economist Jimmy Kimmel, was going after Lawrence Kudlow over at Fox Biz last night. You and I remember Larry Kudlow at Bear Stearns years ago emphasizing the nominal statistic. Tell us what you glean right now from nominal GDP, the idea of our real growth plus a very volatile inflation overlay.
Well, I think right now, it's like when you go over to grandma's house and it's a long drive and the kids are in the back asking, are we there yet? I think we're there in terms of the so-called nirvana norm for the economy. The dual mandate has been accomplished. We've got the unemployment rate at 4%. We've got real GDP rising at around 3%. And we got the inflation rate not quite at 2%, but somewhere around 2.5% to 3%. And so the Fed has accomplished what it wants to do, which leads me to conclude that there's really no reason for the Fed to lower interest rates anymore. And indeed, I don't really think that there was much reason for them to lower it by 100 basis points. And my friends of the bond vigilante seem to agree with me, because the bond yields rose 100 basis points as the Fed lowered the Fed funds rate by 100 basis points.
So, Ed, we did get that a little bit hotter than expected CPI inflation data a couple of days ago. Did that alter your view of maybe how this Fed should proceed?
Yeah, well, sometimes the way I look at these numbers is when they support my story, they're good. When they don't support my story, they're bad, or they're going to be revised. And I don't know that the CPI is going to be revised, but I think there are some funky things that happen at the beginning of the year. A lot of companies raise their prices. I know the data is seasonally adjusted, but I'm not troubled by the inflation outlook. I think the important issue is productivity and unit labor costs as a result of that. And the productivity outlook has been strong. And I think it's going to get stronger, and that's going to keep a lid on inflation.
So what's your view, just in terms of taking risk here, Ed? We think about stocks, bonds, alternatives. Where do you see opportunities here, given that economic backdrop, given that Fed backdrop?
Mm-hmm. Well, we've been bullish on the stock market since October of 2022, and there were a lot of opportunities back then, and now things are obviously much more expensive. I think from here on, I think, maybe it's more like I hope, that the rally in stocks continues based on earnings rather than valuation. If it keeps going up on valuation, we're faced with sort of like a 1990s model of the stock market melting up and then melting down. But that could just be a buying opportunity. It doesn't have to be a long-term bear market, and I don't think it would be.
Off the Yardeni, October 22, and good morning to the great technician Ralph Ancampora, who said the same thing. Up 21% annualized since the Yardeni call of October of 2022. We're on YouTube. Subscribe to Bloomberg Podcast, growing each and every day, learning as much as I can about this digital madness. Good morning to all of you outside America on YouTube. Just humbled by the international reach. A special good morning today to 92.9 FM. Paul, I got to do this right now. It is the tweet of the day. Fred Lynn, Red Sox, saying that Bregman of the Houston Astros coming to the Red Sox reminds him of Rico Petrocelli. Oh, that's almost as important as the next question to Ed Yardeni.
Exactly. So, Ed, we think about this equity market, and I guess that the Fed's going to be more or less on the sidelines, maybe give us one or two cuts. Earnings have to be front and center.
Yes.
What's your view of this earnings power of this market right here?
I think the power is there for the past 3 years, because we didn't think there would be an economy-wide recession. We were among the highest forecasters for earnings. And indeed, for this year, I think we're at the top with $285 a share for the S&P 500, and then next year, $320 a share. And then by 2029, $400 a share. So Those kind of numbers at the current valuations can get us to 7,000 this year, 8,000 next year on the S&P 500, and 10,000 by 2029. So it's I think it's going to be earnings driven, and it's going to be technology driven and productivity driven.
And Yardeni, if we get a boom like that, and you're pretty lonely on that, I mean, the character of going out to 2027, 8, and 9 is a lonely stance right now. A lot of people's long term is 1 year. And if we get this, Ed Yardeni, do business practices get sloppy? I had a wonderful talk once with Robert Crandall, the giant of American Airlines. Do people get goofy and misspend CapEx, et cetera, as we go up the Yardeni bull market?
Well, that's the beauty of American capitalism, right? There's a tremendous amount of money available for venture capital, for startups, and it's kind of like throwing spaghetti on the wall. And I think a lot of these venture funds, that's exactly what they do. They invest in a lot of these startups. They provide the capital they need to come up with their innovations. And some succeed, some fail. We always hear about the ones that succeed. We never hear about the ones that fail, but that's the nature of, that's the nature of capitalism.
Can tariffs, reciprocal tariffs, Trump economics, can it derail the Yardeni bull market?
Well, a lot of people think so, but I'm very happy that they're using the word reciprocal rather than retaliatory. Retaliatory is what the Smoot-Hawley tariff was in June of 1930. We raised our tariffs without any concerns about the impact in other countries, and other countries retaliated, and we had a world depression. And then to get out of that, the Congress passed the Reciprocal Tariff Act, which basically, the basic theme of that was, please take this power out of our hands. We're too dangerous with tariffs. Let the president do it. Well, the president's doing it again right now. And I think the fact that they're calling it reciprocal, and the president said it yesterday, he said, look, we're just going to be fair and we're going to match their tariffs. And if they want to talk about it and lower it, we'll do that. So I think this is all going to lead to lower tariffs, not higher tariffs, when all is said and done. And it could be pretty quick. I mean, you see how world leaders are coming to the White House to say, let's talk about these things before you slap them on.
Yeah, let's switch gears a little bit to the fixed income space here. Where do you see opportunities? I mean, a lot of folks can be pretty happy with the 2-year Treasury at 4.3%. Is that kind of where they should be, or should they take some credit risk? How do you think about fixed income?
That's our view, is that the 10-year should be 4.5% plus minus 25 basis points, as you mentioned before. That's normal, and it's normal in the sense it's where bond yields were before the great financial crisis, before the central banks started to manipulate the bond yield and bring it close to zero. I think it's great that the U.S. economy has demonstrated that it can live with these interest rates because they're fair. They're fair to investors who don't want to take a lot of risk and want to have something that's safe, but getting a decent return. So I think the opportunities in the bond market are probably in the corporate area, because corporations run their finances better than the U.S. government, as the Doge Committee has demonstrated.
Ed Yardeni, next week, folks, and this is anticipated around Robert Schiffman's schedule, we are going to have Robert Schiffman of Bloomberg Intelligence in for an extended conversation on the lack of debt of the Mag 7. I mean, Ed Yardeni, forget about Modigliani and the rest. The bottom line here is there is ample room to use debt for whatever, CapEx, or to diminish equity. I mean, we can issue a lot of debt out there in this American juggernaut economy, can't we?
Well, the U.S. government certainly has done that, and everybody, including the bond vigilantes, are hoping that the Doge boys are successful.
The Doge boys. I detect a new phrase from Yardeni. Continue, Ed.
Well, it's the shootout in Doge City, right? So I can play with this one for a while. I think where there is a capacity to borrow more, but there's no need to borrow more, is in the household sector and the business sector. It's the government that's on the wrong course. And if the government kind of gets reined in, that crowds out less private sector investments. But look, the Magnificent Seven, they don't have to borrow money. They just generate a tremendous amount of cash flow. Corporate cash flow is at an all-time record high. And so companies are cash rich, and they are investing in technology.
And this is a great way to start a Friday here into a weekend of a bull market. Ed Yardeni of Yardeni Research, I can't say enough about it. We protect the copyright of all our guests. Get his wonderful, readable research at Yardeni. I can't say enough about the value of that. A little red on the screen, don't want to oversell it. Futures -7. That VIX solidly better than 16, 15.30. The Sweeney yield, I haven't said that in a while, 4.30%. Sweeney looking up the 30-year fixed rate mortgage here to see the damage done in the week. The 10-year real yield, 2.08%. With our news in New York City, he did not forget Valentine's Day, Michael Barr.
Thank you very much, Tom. Paul, Lisa, President Trump has ordered his administration to consider imposing reciprocal tariffs on numerous trading partners to rebalance trade relations.
If you build here, you have no tariffs whatsoever. And I think that's what's going to happen. I think our country is going to be flooded with jobs.
The tariffs would be customized for each country, aiming to offset not just their own levies on U.S. goods, but also non-tariff barriers, and could take weeks or months to complete. Thousands of employees in the federal government are being handed their pink slips as President Trump continues ahead on his plan to slash the government workforce. The firings include the Department of Education, the Consumer Financial Protection Bureau, the EPA, the Small Business Administration, and the Department of Veterans Affairs. Heavy rain is falling across Southern California, creating deluges of water and mud on roads at the bottom of hillsides left barren by recent wildfires. Captain Eric Scott with the Los Angeles Fire Department says his fellow firefighters are prepared to head off the worst.
We have over 1,000 firefighters on duty every day. We have over 150 additional right now. So they're in fire engines, helicopters overhead, bulldozers, urban search and rescue, even 911 dispatchers.
One swift debris flow in Malibu swept a Los Angeles Fire Department vehicle off the Pacific Coast Highway and into the ocean. Pope Francis has been hospitalized at a Rome hospital to continue his ongoing treatment for bronchitis in the hospital and undergo tests. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Thanks so much. Appreciate that. While Paul was gone, the Red Sox decided to get out of the cellar. 500 ball last year.
Okay.
Bregman in Houston was going to Detroit, and they lost.
Stole the man.
Well, it's like the Verlander never came back, and all of a sudden it's percolating. When was the last time I said, Michael Barr, the Red Sox can compete with the dreaded Yankees?
They're competitive this year.
It's like. Finally.
Really? You think they're going to be competitive?
I think they'd be competitive. Now, I didn't say that they were going to sweep the market.
No,
or
nobody's saying
but
100 games, but all of a sudden it's a team.
Baseball's better when the Red Sox are good.
Yeah. There's Dodgers, Red Sox.
Yep.
Mookie shows up, everyone cries.
Pitchers and catchers.
And the Tigers, remind me, the Tigers are in the same division, right?
Yeah.
Yeah, I still can't get it. I still don't know where Houston is. What is the drill, Ari? Where are the Tigers? AL Central.
Yeah.
Remember when it was easy? There were 6 teams?
Yeah.
And the Red Sox were on the bottom?
That's when I was born.
My entire childhood, the Red Sox were never above 4th place.
No.
And then 1967 happened.
And then, but then they've been good ever since.
But
They've won more than the Yankees have.
It's a different, for those of you internationally, it's a little difference in the air right now. As we pitchers and catchers.
Pitchers and catchers.
You missed.
I did.
You were not. You got to wear your Yankees jacket next week.
Exactly.
We'll get it out when they all come back.
Yep,
right?
we'll do that.
It's exciting. Good morning, 92.9 FM in Boston. Good morning to all of the AL East, AL Central, and AL West. It's going to be, all of a sudden.
We got a good rotation.
And to be fair and balanced, we have to talk Mets here at somewhere.
Sure.
Get ready, Paul.
And the Orioles. We got to throw in the Orioles too.
Well, we must do the Orioles.
Yes.
Oh, yes. We have to cover the Orioles. What we're really going to cover here in an hour and 15 minutes is retail sales off of CPI, off of PPI. Retail sales, that's a nominal statistic. As we talked to Ed Yardeni, that's a top line statistic, inflation-induced. Did you see auto insurance?
Yeah.
Annualized up 11%.
Crazy. Yeah.
Have you seen that at home?
Oh, I have. Absolutely.
Yeah.
But it's got that direct, they just hit my account, so I don't
They're very, that's what happened with me.
Yeah.
I looked and I said, what happened? And what happened was 16%.
Yeah.
Simple is that dollar slightly weaker today. Thank you to Damian Sassar for being with us yesterday with some good EM. I still don't know what carry is.
No, it's okay.
He talks about
right.
carry.
He's got carry.
Yeah,
Bitcoin, Tom, pushing up against $97,000 per token. Matt Miller apparently is going to be in the 11 o'clock hour co-hosting with me.
Really?
Yes, so we will have some Bitcoin discussion there for you, Tom.
Very good. We'll have to see on that. We welcome all of you on your commute across the nation on Apple CarPlay, Android Auto, of course on Sirius XM. Good morning, 99.1 FM in Washington, and of course here in New York, Bloomberg 1130. On YouTube, it's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will a percentage of U.S. experiencing drought conditions exceed 18% on 2/18/25? At IBKR Forecast Trader, the yes, recently at 35%. What's your take? You can trade your prediction at ibkr.com/forecast. Well, we've got futures falling this morning. This is ahead of more economic data. About an hour from now, we'll get January retail sales, also a read on import prices, and that's followed later by a report on industrial production. NASDAQ futures down 0.1%. Same for S&P futures. Dow futures down about 0.2%. We have the 2-year yield at 4.30%. That's little changed. And the yield on the 10-year, 4.54%. And that's little changed as well. To commodities, gold trading near a record. COMEX gold, $2,955 an ounce. Over to oil, Brent crude up about 0.7%, $75 a barrel. WTI crude, $71 a barrel. We have shares of chip equipment maker Applied Materials are down more than 4%. Its forecast, second quarter net sales, well, it fell short of estimates, and the company saying export rules, that could impact its business. Intel shares, they're up more than 1%, and that's putting the stock on track for its biggest weekly gain since at least 1982. The stock really rallied this week. The reason why? Well, there were reports of the U.S. government possibly getting involved with a plan involving Intel and TSMC. And finally, shares of Palo Alto Networks down 5%. It forecast third quarter adjusted EPS came in lower than expected. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. This inspired. One of our interns did this. He's out of Yale. We had a Yale PhD to start the show, and we got to follow up with another Yale PhD. That's the way we roll this morning. Stephen Englander is definitive. He's at the Standard Chartered Bank. He is definitive on cross rates, the dynamics of international economics. And this is very important, folks, not the first order effects or first round effects that the media focus on, but thinking through to the second round, the third round effects. Stephen Englander, again, with Standard Chartered Bank. When you hear reciprocal tariffs or going after the VAT tax over in England, Stephen Englander, how will Trump tariff policy redound on EM economies?
Well, it's complicated. First, I may have a PhD, but I don't understand what the VAT issue is, because they charge their own companies VAT overseas, and they charge us VAT when we sell our stuff. It's like a sales tax, but it applies to both. I think reciprocal tariffs are going to deliver a lot less than promised, because if you average things out and look overall, the difference between our tariff rates and the world's tariff rates is not that big. And, especially with our major trading partners. So we're unlikely to get the joy either in terms of import substitution, producing domestically instead of buying abroad, or in terms of revenue collection.
Right.
I think from the reciprocal tariffs. In parts of the world and some countries it may hurt, but I think it's probably going to have less of an impact than advertised.
So, Steve, from your perspective, as we look at the U.S. dollar, it's off a couple of percent year to date, but it's had such a strong run here from, September, October of last year here. Is there any bear case out there for the U.S. dollar?
There's a short-term bear case and a long-term bear case. The short-term bear case, we wrote about it yesterday. The inflation numbers aren't that bad, even though we overshot on both PPI and CPI. The components that go into PCE ended up being relatively modest. So we expect core inflation to drop from 2.8 to 2.6, and it could go, close below 2.5 in the next couple of months. So that's, it will make it easier for the Fed to cut if there's any sign of economic weakness. And I think the labor market is kind of weak. Actually, interesting statistic. You look at the Atlanta Fed's measure of how much job switchers get paid versus people who stay in their job. And the differential has collapsed. It was a couple of percentage points in 2022. It went down to about 1%, last year. Now it's almost zero. So it's an indicator that the labor market just isn't hot. It may not be, deadly, but it's just not hot.
Well, then are you going to tell me you're not resilient dollar, and that at some point Steve Englander models out a quarter out, 2 quarters out, 3 quarters out to be inflammatory, the dollar breaks and goes weaker?
Well, we think it's a short-term thing, but we think actually in the first half of the year, as the numbers come in, there'll be more dollar negative than positive. We still think of it as a correction, rather than a long-term switch.
Interesting.
So,
if I can talk about the long term, just for a second,
please.
There's a chance that after the dust settles, that the policies don't work. If the market, if we have some tax cuts without really paying for them, the bond market is going to offset a lot of that. And, imports, it's not everybody's cup of tea. The tariffs, you can hope that he succeeds without saying that the historical track record is all that positive. If the policies don't work, U.S. is one of the gang and not that much more exceptional. So, they better hope that they work.
Steve, how about looking at the dollar yen here, 152.6 here. What's your view of the yen here? What can the Bank of Japan do here?
Pray for lower rates in the U.S. The dollar yen has really tracked in recent weeks at the long end of the U.S. bond market. So the yen's in trouble when 10 years go up to 465, and then it comes down to 450, and everybody loves the yen. So I think it's a differential play. I think the market is underestimating the determination of the Bank of Japan to raise rates. So we are positive dollar yen. We think it'll go below 145 in the course of the year, but it's short term, it's U.S. rates.
Stephen Engler, sum all this together. And to me, it's the basic idea that there's an inflation study, there's an international economic study, export and import dynamics and all that. But at the end of the day, out there somewhere is a dampening of real GDP. Is that an Englander worry?
I mean, it's always a worry. I mean, one of my big worries is that we're just mismeasuring everything. You know, it may not be the fault of the statistical agencies, but, you know, we saw the issues with counting immigrants, and we've seen how, you know, QCEW, which is the quarterly census of employment, is much lower, not just in the benchmark that we had, you know, 10 days ago, but you look at what it suggests for Q2, it also suggests that NFP way overestimated labor market strength. Some of the other indications we talked about, the Atlanta Fed indications, it just may not be as strong as we think it is.
Well, let me get this in. One final question. Stephen Englander, then, are you with Vice Chairman Clarida writing in the FT yesterday that he's really quite aggressive? There's a disinflationary tendency in place?
I think it's more there than appears to, you know, on the surface. I mean, there's a lot of PCE, core PCE that's imputed. You know, a lot of it is kind of technical why we have inflation. I think if you strip it down, the disinflationary tendencies are more powerful than the Fed has acknowledged and the market recognizes. At least in the short term.
We got to leave it there. What a great brief. Thank you. Folks, this is what it's about on a Friday. I mean, I'm not focused. I didn't know it was Valentine's Day till 2 p.m. yesterday. I'm just massive timeout chair. But to have Yardeni and Englander back to back, we got to get somebody from another school here. I mean, where's Cam? Where's Duke?
Exactly.
Get him here. Did you see the Super Bowl ad where the poor kid from Duke shows up at the house and knocks on the door
I saw
of
that.
the UNC?
That struck
fan?
close to home.
You know, the dad had a look.
Yes,
Did you ever get that look, young Sweeney?
No, but yeah, that's definitely a thing down there, you know, Duke, North Carolina. So that was a good ad.
That was a good ad. We like that one. Stephen Englander, thank you so much. That was really something, folks. I really commend the Clarida essay in the FT. It's just saying, look, I know there's a lot going on, but this disinflationary tendency is there, and Dr. Englander agreeing with Dr. Clarida on that as well. Futures at -8. The VIX 15.28. We are an hour away. Let me get the date calendar out here. Paul Sweeney does this by going to ECO-Go.
Yeah, sure.
Import price index. John Riding thinks it's a big deal.
He does.
John Riding once said to me, it matters.
All right, it matters especially in a world where you're talking about tariffs and reciprocal tariffs.
The reciprocal import price index.
Yeah, I guess that's.
We'll do that at 8:30.
Yep, and we got retail sales.
Industrial production at 9:15 as well. The pros will say business inventories matter. I sort of. Yana Hatzius once told me, just take the 3-month moving average and move on.
That's fine. It's on EcoGo,
move on.
So we'll talk about it.
But seriously, retail sales here, and we will go to that control group, which is where you take this out. Lisa Mateo's eggs at Costco, that goes out.
That's out.
As well. I walk in the door, the security guard here at our world headquarters says, is Lisa doing newspapers today? Yes. Lisa will be here in a bit, which are really chosen, selected newspapers. We're on YouTube. Subscribe to Bloomberg Podcasts for all that we do. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures falling. This is the day after President Trump rolled out reciprocal tariffs that won't take effect right away. Nasdaq futures up down a tenth of percent, 36 points. S&P futures down a tenth of percent, 9 points. We have Dow futures lower by about 0.2%, 116 points. The 2-year yield 4.29%. That's little changed, and the yield on the 10-year 4.53%, and that is little changed as well. We have the Bloomberg Dollar Spot Index down about a tenth of a percent. The euro right now at 104.73 against the dollar. Shares of video streaming company Roku, they're up 15%. It posted a narrower than expected loss. Revenue top forecast, and big thanks to that was an increase in accounts and also spending per household. Then we go to Alibaba, rallied 6% in Hong Kong. Reports that Chinese President Xi is going to meet with Alibaba's co-founder Jack Ma and other business leaders. And a few companies making news. Sources say Apple, they will overhaul its phones in China with AI features by the middle of this year, and that Baidu will be a secondary AI partner for its iPhones there. And finally, TikTok back on the mobile app stores of Apple and Google. That is your Bloomberg Business Flash.
Saw that.
Paul and Tom.
Lisa Mateo, thank you so much. Greatly appreciated. Paul Sweeney and Tom Keene joining us now. We've been at 60,000 feet this morning with Ed Yardeni and Stephen Englander. We're going to come in a little tighter here to 8:30 in 40 minutes, 45, 50 minutes. We're going to get retail sales, and Jennifer Lee is going to give us a great briefer. She's with BMO Capital Markets. She's been on recently. She's really been in fire in analysis of the dynamics of Y equals C plus I plus G plus NX. Jennifer Lee, the state of the American consumer as we go to retail sales.
Good morning, and thank you very much for having me here today. So far, we are sort of looking at modest gains of about 0.3%, just for the headline and for the excluding autos figure. But we have to remember, even though that's a bit of a slower, increase that we've seen in recent months, that's still roughly like 4 or 5 months of pretty solid gains. And I think, we have to look at revisions and all that and where people are spending. So it's going to be an interesting one to watch, but it's not the be-all and end-all of consumer readings.
Is the inflation component of that nominal number, can retail sales be goosed up like we saw CPI goosed up on Wednesday?
We probably will see some of that goosing up, which is why, we sort of have to take this with a grain of salt. And what's probably most important will be the PCE numbers, like the monthly personal spending income numbers, which are coming out, I guess, in a couple of weeks. So I'm losing track of my days now. So that would be more important. But again, this will be good, at least give us a good indication of whether or not they're spending, with, regardless of the higher prices and where they're spending on.
We're jargon free here, Paul. Goosing up is calculus talk at the University of Waterloo. They use the word goosing up instead of first derivative.
Jennifer, how are you viewing all this tariff talk we've had? It's now been, a couple of months of this in Mexico, Canada. Now there's reciprocal tariffs. It just seems to be the topic du jour coming out of the Trump administration. How does that impact your outlook for the economy, your outlook for inflation?
So it makes I think all economists' jobs, especially the one that's going to be on President Trump's team, very, very challenging to figure out. I mean, when everything is going to take place. We've had all these different dates that we're keeping on our calendars. I'm sort of losing track, but March 4th is the next one. I believe that's going to hit, which is when, because we were given that 30-day pause, that 30-day reprieve, which was reassuring. So that's going to come to an end. I believe it's March 4th, and then the next date to watch is March 12th, which is the 25% tariff on steel and aluminum. And of course, April 1st, I don't know if that's been lost to anyone, but it's April Fool's Day. But, that is roughly the day that the entire Economist team in the U.S. will be looking at each country that the U.S. does trade with, which is going to be like everyone, and see how, there are going to be any reciprocal tariffs being in place. So it makes, again, the job for an economist and forecasting very, very challenging. In terms of the outlook, it's, in terms of inflation, of course, and the hit to confidence, particularly here in Canada, that's notwithstanding, it's obviously not good news for Canada.
So to what extent does that create material risk to higher inflation, do you think?
I think it creates risk for higher inflation in the U.S. as any tariff would, and it does as well here in Canada. Of course, the currency could provide an offset. We're probably going to see a stronger U.S. dollar because of this. You're not seeing it this morning, but you're probably going to see stronger U.S. dollar and because of that, and weaker currencies elsewhere. So that will be an offset. So this is going to be a huge challenge for obviously Fed Chair Powell. He was told, I can't remember what the words were, that that rate cuts, there should be rate cuts because they go hand in hand with tariffs. And I think Fed Chair Powell is probably saying, well, I don't think so. And so there's going to be the discussion, and that'll be a very difficult discussion, I think, to have.
Jennifer, one final question. And Paul mentioned the hockey tournament. There's an all-star game, folks, and they're doing something different this year. This all-nation thing. Sidney Crosby looked like an act of God. I saw one video. It's like unbelievable what the Giant of Pittsburgh can do. They were booing at the Forum in Montreal, Jennifer Lee. With all the assets you have at the Bank of Montreal, what will the real GDP dynamic be between Canada and the United States, and how will it be expressed through loonie?
So our GDP, that's a great question. So our GDP forecast, by the way, is just a little bit lower than what we had before all the tariffs kicked in. But because, again, of the hit to confidence from the business side, from the consumer side, the possible or the likely, freezing perhaps of business investment until everything is settled, until the dust settles, and I don't know how long that's going to take. That's not great for the Canadian economy. And, trade with the U.S. for us is a huge deal, obviously, right? 75% of all of our exports go to the U.S. Everything that we import, roughly, I think it's like 40% of it, all comes from the U.S. So it's a big deal. So any of these tariffs, is obviously not good news for the Canadian economy.
Thrilled you're with us. Thank you so much. Ms. Lee is with the Bank of Montreal, BMO, Capital Markets. Right now, red on the screen, I got a little bit of a small stock action up, just a point. The VIX 15.30. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Donald Trump ordered his administration to consider imposing reciprocal tariffs on numerous trading partners. The president signed a measure directing the U.S. Trade Representative and Commerce Secretary to propose new levies on a country-by-country basis in an effort to rebalance trade relations. Trump spoke at a joint press conference with Indian Prime Minister Narendra Modi.
Right now, a reciprocal nation, we are going to, if it's India or if it's somebody else with low tariffs, we're going to have the same. We're going to have whatever India charges, we're charging them. Whatever another country charges, we're charging them.
The sweeping process could take weeks or months to complete. On his first trip to Europe as U.S. Defense Secretary, Pete Hegseth took part in a series of meetings today with his Polish counterpart. They discussed continued U.S. support in the region, including ongoing support for Ukraine. Hegseth says the administration remains aligned on the U.S. role in Ukraine.
President Trump's national security team, from Mike Waltz to the vice president, to Secretary of State Marco Rubio, we're all on the same page. And our job is to ensure that our Commander-in-Chief, the President of the United States, has the full spectrum of options.
Secretary Hegseth. Meanwhile, Ukrainian President Volodymyr Zelensky says he is prepared to engage with President Trump's peace initiative and is willing to have direct talks with Russia. Robert F. Kennedy Jr. was sworn in as head of the Department of Health and Human Services. The one-time presidential hopeful has openly questioned the safety of widely used vaccines. At the Oval Office, Kennedy was sworn in after winning Senate approval largely along party lines. RFK spoke about a federal agency Elon Musk and Donald Trump have tried to eliminate, USAID.
It has been captured by the military-industrial complex. It has become a sinister propagator of totalitarianism and war across the globe.
Senator Mitch McConnell was the only Republican to vote against Kennedy. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, we have a responsibility here within the archives of Bloomberg's surveillance to look back where necessary. Here's a partial score. Duke 77. No, so it's a hypo. Clemson 77.
Yes.
Duke 71.
Yep.
We now have team coverage from Paul Sweeney. What in God's name happened?
It's Clemson's pretty good. Actually, they're very good, and you can't win them all. So I mean, you take one every once in a while.
From number 2 to number 3.
Yeah, it's all right. Watch for us in March.
Well, March is close. Like
I know. Yeah.
Is it like we had spring training in college basketball? When does March Madness fever click in? Like any day?
Yeah, actually, in early March you get the ACC tournament, all the conference
Early
tournaments.
March is a tournament.
Early March is a tournament.
But there's only one tournament left, so they have a pre-tournament before
I
March
think so.
Madness.
Yes, exactly. So we'll see, but it'll be Duke's going to be right there at the end.
Stanford, 4 p.m. tomorrow. What do you think, Stanford?
Just wipe them. I mean, please. It's just, I mean, Cal
He's
Berkeley,
still not
Cal
back
Berkeley
from the Western Rockies,
Exactly.
just so anyone knows. Futures at -10. Good morning, everyone.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
A daily look at the front pages. We're going to do that right now. We're going to do that with Lisa Mateo. It's a special edition of our front pages report brought to you by IBKR. Will the U.S. CPI, will it exceed 2.4% in March of 2025? Trade, your prediction with IBKR forecast trader. The yes was recently at 60%, 60%. Buy yes or buy no and earn $1 if you're right. Go to ibkr.com/forecast. I'm so far behind, I'm like trying to get a FedEx on the Rock Valentine's Day card for Lisa.
Oh, okay.
It's there he is. I hope he gets a royalty on that. Lisa, what do you got?
Thank you. Well, it's been cold here, right? Rain, snow, it's been kind of miserable, but we are getting closer to outdoor dining season. April 1st is the day when you start to see everything come out. The problem is that there's a backlog of applications. So the Department of Transportation, they're the ones that approve the licenses for them to build the sheds and do all that outside.
This is the sheds on the street.
So we still do that?
We're still doing it because remember they took them down last year because some of them were an eyesore and that kind of thing.
Most of them,
yeah, a lot of them. So the Department of Transportation has to approve the licenses. So about 4,000 applications have been submitted.
Really?
39 have been approved out of 4,000. So
I didn't know we were still doing that.
We're still doing it.
Okay.
So now they're kind of giving the restaurants the green light. If they put in the application, they can build the shed on April 1st if they apply by the certain rules. But it's just it's a pretty.
Well, it's good for them.
It's a little bit of a mess.
Just being in Paris, I wish we had the sidewalks of Paris so the cafes were comfortable outside.
Right.
But our sidewalks are just too narrow.
Yeah. I mean, the outdoor dining was great during the pandemic. Yes. Thank goodness it saved, I think, a lot of restaurants.
Oh,
It was great for consumers.
It's their life.
But I don't know how much I don't know. We'll have to see how the city goes.
Dan Doctoroff, full disclosure, folks, used to work a huge support of mine. Thank you, Dan. Dan Doctoroff provided leadership here on the safety issue of them. And what, Lisa, you're talking about is the now what?
Yeah.
Right.
Interesting.
And
what do you got
fun.
next?
So we'll see what happens. Okay. More adults are actually eating off of the kids' menu. So there was a study that came out. A number of kids' meals placed by adults rose 28% last year compared with 2019. The reason why, the smaller portions, right? Lower calories because a lot more people on the weight loss drugs. So now they need the smaller portions.
Huge
so they
issue.
go to the kids' menu. Cheaper prices too, and hey, you get a toy, to go with it, or a prize to go along with it.
I literally go, Paul, to a certain restaurant, pretty fancy, on the Upper East Side, because their portions are smaller.
Yeah.
It's not. What was the one? One of the big chains. Like their gimmick was you would go home with both hands full with stuff.
Yeah, or even you go to a diner and your plate for breakfast is ginormous.
We split it. We'll split our dinner entrees a lot.
Okay.
Do they let you do that, or do you have to charge?
No, they do. And sometimes you get a charge, and sometimes I just order the appetizer thing. But the exception is Cracker Barrel. You go in there full bore. Country boy breakfast. Bring it on. But you're right. All right.
But and the thing is there's an age limit, right? It's like 12 and under or something, a lot of restaurants. But the restaurants are just letting them go by.
Lisa. Paul Sweeney at 2 a.m.
Yep.
in Shewaf between UNC
Durham,
and
Carolina,
Duke.
exactly.
I got an exam in statistics. Please help me. Next.
Okay, last one. The rise of the three-pointer. Okay, they're saying it's kind of changing basketball. They don't know if it's for the good or for the worse. Steph Curry, of course, a big thanks to this because he established himself the best long-range shooter. So now these generations of basketball players who watched him and look up to him growing up are now in the NBA.
Yeah.
So now you have more of these guys shooting from the outside. Even the taller guys, the over 7-footers, are shooting behind the three-point lane.
Wembanaya, or whatever that guy's name is.
Yeah, I know.
What do you think, Paul? Should they pull it back?
No, it's just the evolution of the game. I mean, and all the if you can't shoot the three, I don't know how you get to a good college.
Oh, come on. They shouldn't knock the thing back 3 feet or 4 feet to
They
make
could,
it harder?
yeah, they could. And then the players will adjust, I think.
We had a committee meeting here. The interns called me up last night at 9 p.m. from some bar downtown. And they said, what's the most emotional song we can do for Lisa? There's no other choice. Happy Valentine's Day, Lisa Mateo.
I stay. Would it be a sin if I can't help falling in love with you?
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo, Ed Yardeni in the last hour, the trend-based Valentine of the day, Katy Kaminsky, joining us here in a moment. This is just great. Yardeni for a conversation, and then Kaminsky. It doesn't get better than this. We'll do that here in a moment. We say good morning to all of you across the nation on your morning commute. On YouTube, subscribe to Bloomberg Podcast. John Ehrlichman.
Yes.
Up in Canada.
Love John.
Just putting out, today is the 20th anniversary of what Chad Hurley wrought.
Really?
YouTube.
Wow.
Today is, and it's changed my life.
Holy,
I can tell you
sure.
that. I really can't say enough about it. We'll talk a little more about this later, but happy birthday to all at Google, and particularly to the gentleman from Western Pennsylvania, Chad Hurley, who really drove it forward years ago. Quickly on the data, futures at -8. You're going to do that in a moment with Lisa. Oil, Sweeney's been watching it. We didn't get a 69 print.
No, we did not. So we're sitting here at 71.88 for WTI crude oil. And for those of you that watch, TV, you know about this energy stuff.
We'll see. Yeah. This is all there is. Busy day in Washington as well. Scheduled a conversation with Mr. Zelensky, our Francine Lacroix, in the next hour in 28 minutes. Retail sales from the interactive broker studios, the Bloomberg Business Flash, Lisa Mateo.
And we've got futures falling, and this is at the end of quite a week packed with tariff talk. We had Ukraine peace efforts, a ton of earnings, and also economic data. So we'll start with NASDAQ futures down about 0.1%, 30 points. S&P futures down 0.1%, 7 points. Dow futures down 0.2%, 99 points. The 2-year yield, 4.29%. Little change than the yield on the 10-year, 4.53%, and that is little change. Luxury stocks, those are a bright spot over in Europe. We have Hermès rallied to a record in Paris. Its holiday season sales surged. Checking in with currencies, the Bloomberg Dollar Spot Index down about 0.1%. To earnings we go, and we'll start with Moderna. Recorded another quarterly loss. Vaccine sales, they fell. The company had an unexpected charge for a canceled manufacturing contract. The shares fell as much as 8% right now. They're down about 2%. Airbnb S&P up 14%, issued an upbeat forecast for the first 3 months of 2025. And Coinbase, they reported a surge in quarterly revenue, profit. Shares, though, starting to take a turn. They're down about 1% after rallying 8% yesterday. That was ahead of the results. And we'll stick with crypto Bitcoin. CNBC reporting GameStop considering investing in Bitcoin, other cryptocurrencies. Their shares up about 8%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. This is really important. We had Jeff DeGraff on yesterday from Renaissance Macro, and I was parsing the difference between trend-based analysis of the charts in a more stochastic or dynamic analysis. And DeGraff and I are somewhat opposite on that. Jeff is really successful with momentum, stochastics, dynamics. I'm in the Vatican with Katy Kaminsky. Katy and I are very much trend-based, and she joins us right now, Chief Research Strategist, Alpha Simplex. Katy, what is the key trend at this moment?
A good question. I mean, I'm going to go ahead and say my favorite trend today, because it's Valentine's Day, is gold. Take a look at that. But you're also seeing that generally long equities, short fixed income, and we can talk about that because that has been puzzling me a little bit. We've also seen long signals in energies, and we're also seeing the long dollar trying to hold its ground. So It is an interesting environment.
I'm really interested off a conversation yesterday. Are you long China? Is China beginning to turn where you can climb on a constructive trend?
China, and especially EM, hasn't really come back yet. The one exception, I'd say, Tom, has been Hang Seng. So look at Hang Seng. Hang Seng has kind of divided and sort of moved in a different direction and has shown a little more acceleration, perhaps related to some of the DeepSeek news already. But I've been waiting for China to find that direction for quite some time, and keep looking.
Yeah, Paul, she just assumes that everyone knows. Hang Seng is not a surfing index. No. We call that the Hong Kong Stock Exchange.
That's
Thank you, Ms. Kaminsky, for the confusion there.
And for the last 40 years, Tom, if you wanted exposure to China, you had to invest
there was no choice.
in the Hang Seng index. That's how you played.
You could do that from the M bar at the Mandarin. It was amazing how the Hang Seng index looked from the M bar at the Mandarin downtown.
Katy, I know you guys focus on trend investing. I guess my question is, when is a trend a trend? Is there a certain time period that you guys say, oh boy, such and such asset, gold or equities are moving in a direction, that's a trend I want to play?
So this is a really good question, because the art in trend following is really in sort of the details of how you aggregate your views about a particular trend. And so in order to establish a trend, it's really somewhat like a voting mechanism. So you need to see enough technical signals that are in the right direction, and that will build as you see more and more conviction in individual trends and deteriorate as they fall apart. So
just take equities, for example. Moving higher here year to date after, a strong 23, a really strong 24. Now we started out 25 strong. It looks like a trend to me. So how do you guys just play equities in general?
So equities have actually increased in their conviction more recently. The bigger story in equities has been which equities, I'd say. So as you've seen U.S. equities come out ahead, this month you've started to see a little bit of dispersed pockets of things like we just talked about the Hang Seng, but Europe also coming back a little bit. So we're kind of seeing a little bit of rotation in terms of which equity markets are building their significance in terms of how strong their trends are.
Bloomberg Surveillance, we're with you across the nation on your morning commute. Catherine Kaminsky with us. She is with Alpha Simplex, Boston, and not an acquaintance with the college on the Charles River. The question that Paul Sweeney just asked folks is the single most important question to how not to lose money in the market. How do you discover and find a trend? And as Katy Kaminsky knows, people, including Andrew Lowe, have spent decades and decades working on this. Good morning to the giant Wells Wilder down south and all that he did. Katy Kaminsky, how do you use moving averages, which are after the fact, to try to get out front of a trend?
So this is a good question, and this is why I've been so fascinated with trend as a strategy. I think my view is whenever the world changes in a way that we didn't expect, those moving averages and those measurements of the direction of the trend start us moving in the direction of a new environment. And that's why times like 2022 were great trend environments, because the trend was there, but few people were willing to follow a new direction or something that wasn't the same past.
And it's amazing. Mike McGlone just woke up in Miami. He's just sending me an email I haven't read. McGlone would tell you the commodities trend better than anything else out there. Paul, what is so critical about this is the media reports trend-based charts simplistically. In the moving average study codified by a guy named George Kleiman, you got to use 3 moving averages run exponentially, which is a different mathematics. It's not as simple as it looks. The fine art of this that Katy Kaminsky uses, folks, has a legit mathematic complexity that isn't answered on a TV screen in 2 seconds. Paul, your question was brilliant.
Well, actually, I mean, you go to MIT and you have to go math, I guess, by definition.
Yeah, that's true. But I mean, people think this stuff is smoke and mirrors. It's not. It's not. It's a lot of hard work by people, including Mike McGlone, who probably his message wants to say, Tom, did you get BitDog right? No, Mike, I didn't.
Exactly. So, Katy, if I think about a trend, one of the biggest trends we've seen over the last number of years, and it's part of the Trump trade, I guess, just more recently, is the U.S. dollar and the strength in the U.S. dollar. I mean, don't you just have to be long the U.S. dollar these days?
This is a good question. I mean, those are the 2 trends I've been questioning this year. A, the US dollar, and B, short views on fixed income, aka higher yields. The US dollar started to really strengthen later last year, and there's been consistent, strong themes that the US dollar could be ahead, at least for some time. So what's interesting to me is that's consistent with perhaps a pro-US growth story. It's also consistent with the Fed being on hold. So there seems to be a couple of different things that have continued to keep the dollar strong.
And now, folks, for you in global Wall Street particularly, the question Catherine Kaminsky does not want to answer. Katy Kaminsky, on death on volume analysis. Do you find an efficacy to looking at the dynamics of volume in deciding if a given trend is going up or down?
So volume can be used as a measure of depth in the market for different types of signals. It's just one type of signal that one can use in trend following. And if you think about it, looking at sort of the depth of a market tells you that there's room for that to go. So I think that's a classic technique for trying to think about what the future evolution of the price is.
And Paul, what's so cool about this on the bid and ask, and Paul Sweeney's had the bid walk away from him so many times he can't count. If a stock's going up, is it because there's buyers or is it because no one's selling?
Yeah.
It
depends. It depends.
Cosmic. It's like Lord of the Rings.
Exactly. One of the trends here that has just been amazing for a lot of investors, Katy, has been gold, and you mentioned it earlier. Is this just the fact that China's buying, whether it's the government, individuals? What do you make of this gold situation?
Oh, I love this. There was an amazing article in Bloomberg yesterday by Simon White, which talked about the lack of supply of gold and the excess demand. This was super cool. And, you know, we have seen the technicals just going crazy since last year. So gold just looks like it can do no wrong. The first order effect, people are thinking, you know, people are nervous. They're worried. They don't know what's going to happen. So they're buying gold. But his article pointed out some new interesting ideas that people aren't willing to lend gold. People are squandering it. So it's just sort of the safe haven asset that, you know, it always wanted to be. I guess that's what you'd call it. So big trend, huge trend.
Right. What is your trend in copper right now in commodities? I mentioned Mike McGlone and the idea that, you know, I learned this from Cohen, 40 years ago. Your commodities trend. I mean, coffee, is that a trend or is that hyperbolic where you can't play?
So coffee and copper. I mean, amazing. Asking me the right questions here, because copper has been up about 10%.
Katy, we're so...
Yeah, this is awesome.
Katy, Yardeni shows up, and Paul and I sort of glance at the note. Kaminsky's on. We're up at 3 a.m. reading in. Okay, continue.
Yeah, so, I mean, coffee has been a big trend. It's still very, been a successful trend. Cocoa has been one of those that we talked about, but less recently. So gold, coffee, even natural gas has been up quite a lot this month. So there's quite a few interesting uncorrelated trends out there.
Right.
Other than that, not much is moving. So the commodities are exciting right now.
I call that soup. I agree. There's a soup out there, and you're dying to find clarity. This has been a clinic for Global Wall Street. This is what we tried to do when we invented Bloomberg Surveillance, talk to smart people and advance the conversation. Katy Kaminsky with Alpha Simplex in Boston this morning. I want to take a moment here because 4 days ago when Sweeney was out with Grizz in the Western Rockies, and then 3 days ago when Sweeney was out with the Grizz in Western Rockies, and moments ago he published again. Next week, and I don't know when it is, my people haven't told me when, Robert Schiffman has agreed to be with us for an extended conversation.
Nice.
Paul, at Bloomberg Intelligence, is the single best Mag 7 financial analysis I've seen in ages. It goes back to the quality of the Sanford Bernstein sensitivity analysis years ago, those boxes where they would box in. The latest publication, how much could Amazon use for buybacks? His answer, hundreds of billions. He has a hyperscaler spending frenzy. Where do they get the money for all that CapEx? I just want to set this up. Sweeney hired this guy. What was it like in the interview with Robert Schiffman? Were you shaking?
No, it was great. I mean, he was. I kind of
Was
knew.
he sober?
I knew him from Credit Suisse First Boston. That's where he was on the fixed income team there, which had a great investment grade and high yield research business at Credit Suisse First Boston. So we were lucky to get a chance to hire Rob. And Rob covers all of the technology credit for Bloomberg Intelligence. And you would think, why would the Microsofts and the Amazons ever be in the debt market since they have so much cash and so much free cash flow? And the answer, Tom, is simply because they can. And particularly when rates were next to zero, they could just borrow, buy back stock, buy back stock, buy back stock.
This is copyright material, folks, on the Bloomberg terminal, Bloomberg Intelligence, Robert Schiffman. You'll see it. It's called BI Bits and Bytes. Did you come up with that phrase?
No, I think that's a Rob
It was like a marketing
special.
thing. He had a team of people to help him out with that. Anyways, Robert Schiffman will be with us next week. He's very, very, it's like Mandeep or Anurag, you know. They tell us when they're free.
Exactly.
But we got Schiffman next week on fire on the question of the moment, which is Mag 7 and how they're going to pay for all this data center stuff. And of course, bringing that over, and this is my bugaboo, folks. Everybody talks concept, and does Zuckerberg look like he's feeling okay? And is Jeff's boat big enough? Forget about it. It's about the financials. We'll have Schiffman in here next week. Right now, with retail sales in 15 minutes, futures at -6. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. President Donald Trump has rolled out his plan to increase U.S. tariffs to match the tax rates that other countries charge on imports. Trump spoke about the reciprocal tariffs after he met with Indian Prime Minister Narendra Modi at the White House Thursday evening.
We're just going to say whatever you charge, we charge. And I think that's fair for the people of the United States. And I think it's actually fair for India.
Thousands of employees in the federal government are being handed their pink slips as President Trump continues ahead on his plan to slash the government workforce. The firings include the Department of Education, the Consumer Financial Protection Bureau, the EPA, the Small Business Administration, and the Department of Veterans Affairs. Meanwhile, protesters gathered in Washington, D.C. Thursday, demanding a stop in cuts to the Veterans Department. Democratic Senator Richard Blumenthal.
We're going to stand with the VA. We're going to fight for our veterans. We will not tolerate. Elon Musk's disrespect for veterans.
Senator Richard Blumenthal. The White House barred an Associated Press reporter from covering an open press conference with President Trump and Indian Prime Minister Modi. The third day, its reporters have been blocked from covering the president. The AP was blocked from attending an event with Trump and advisor Elon Musk on Tuesday, reportedly as punishment for refusing to adopt the president's new Gulf of America label in its style guide. Pope Francis is in a Rome hospital to undergo some necessary diagnostic tests and to continue his ongoing treatment for bronchitis. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr's got the flip-flops on, escaping somewhere in the warm tundra of America and out into the ocean. A cruise is coming up.
Really?
It's on the SS Minnow. Looks good. Looks like that'll be good. Here's the brief, Michael Barr, right now to assist from the surveillance team. To avoid falling off a cruise ship, always stay away from the railings. Don't climb on them, Michael Barr.
I was just going to do that. I'm glad you told me that.
Avoid sitting on the edge of balconies and be mindful of your surroundings after the fourth daiquiri. That's what it says right here.
It might even be more than that with the daiquiris.
Do you have the room? I mean, Cy Benson in our control room, the room where you can see out the port and the starboard windows at the same time. It's like a ginormous room way up high where you could see the sun. They turn the ship so you could see the sunrise.
Well, I think because of my budget, my port window is just a circle, and you look out of that, that's it.
It's going to be great. I've never been on one.
No, me neither.
We talked about doing like a surveillance cruise.
You've never been on a cruise?
I have never. No, well, I did with an Eclipse once. To be fair, yes, I did on an Eclipse, but it wasn't like a real cruise. I mean, nobody served me a daiquiri.
Yeah.
You just didn't go to the right places, man. You got to go to the casino part of it.
And you're not doing like where you go from St. Petersburg to Tampa.
Yeah, well,
I mean, you're out like in the real ocean, right?
Yeah, oh yeah, you're going to be out there.
Nice.
Very cool.
Beautiful.
And,
He's all ready. You got the haircut and everything.
He's
ready to
my
go.
wife said, it's like, I'm tired of you looking like, you from Yahoo Forest, man, and all, and just clean up.
It's a Valentine's redo, right?
Yeah.
I got the same thing, so it's just good company. Michael Barr, we'll get a full report here. I love this. The finish line here, the warning from the SS Minnow people, quote, and never get so intoxicated that you lose your balance. That's before you get on the boat.
We don't even check in yet, and you're already,
We're going to check in with retail sales in 9 minutes here, folks, with futures -6. And what do you think, Paul? To me, there's like a Friday lassitude to the tape.
Sure, yeah.
It's a little sleepy.
Little sleepy here. We got the yields pretty steady as well.
I don't know. We'll see what we get. We got industrial production coming along as well. We'll go to the control group, which is where you take retail sales and take out building materials, cruise ship lines. I don't know, other stuff as well. But we'll see on that. We'll do that here.
Tom, your VIX is sitting down here right on 15.
Bull market. Did you see like SPX, NASDAQ almost at record highs?
I know.
So they say ATH.
Oh,
Kaminsky says
gosh.
ATH
I
is
see what she does.
the right language. It's Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimal financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, to the markets we go where futures falling. This is ahead of more economic data. We are moments away from January retail sales. A read on import prices. Stay tuned for that. Ahead of it, NASDAQ futures down 0.1%. Same for S&P futures. Dow futures down 0.2%. 0.2%. The 2-year yield at 4.29%, down 1 basis point. The yield on the 10-year 4.52%, and that is little change. Gold trading near a record. COMEX gold $2,949 an ounce, and we have Brent crude at $75 a barrel. Shares of chip equipment maker Applied Materials, they're down more than 4%. Its forecast for second quarter net sales that fell short of estimates. The company said export rules that could impact its business. Then you have shares of Palo Alto Networks down 4%. It forecast third quarter adjusted EPS came in lower than expected, and Tesla leading the gains for the Mag 7 this morning. Its shares up more than 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Paul Sweeney and Tom Keene here, up to retail sales in 4 minutes. Jay Hatfield with us right now with Infrastructure Capital Management. We'll go to Lisa for the retail report and then talk retail sales, the state of the economy with Mr. Hatfield. I got to go, Jay, to what you're looking at now. It's something Paul's alluded to because he keeps watching for West Texas Intermediate with a 69 print. We're not there yet, but nobody's modeling out, not to be dramatic, a collapse in hydrocarbons, but just the bid falls away. When and how does that happen?
Well, I guess one point where we have superior data is that the notion that Trump is going to be able to get the U.S. producer to produce dramatically more is probably incorrect. They continue to be focused on capital return on invested capital. You saw Chevron laying people off.
More than that, huge. Bertha's doing a huge restructure.
Right. So it wasn't really, surprisingly, partly because they're just ineffective managers, Biden wasn't really constraining U.S. production. It was constraining U.S. exports of natural gas, but not oil. And we gather water in the Permian, and our indication is not like they're not going to produce more, they're just going to follow their normal path. So that's not really a good bear case for oil. But what we observe, and I think most people agree, is that this administration has tremendous influence with particularly the Saudis, given that they've sold arms, they used to be supporting the war with the Houthis, and Trump is good at using his influence. So we believe that even if there's very strong Iranian restrictions on production, or even Russian, because they're trying to resolve the war, that if oil prices go to 80, then he would literally call OPEC and say, produce more. And we saw that actually happen during the pandemic. So there's always a range with oil, because we could see 60, we could see 80, but we just made it simple and said 70. We were at 80. So we think it's capped, and all that's important too, because everybody wants to talk about the inflationary impacts of Trump policies, but nobody wants to talk about any of the deflationary effects. Last point is just the dollar is ultra strong. That matters for oil. So it's a very one-sided conversation about inflation, in our opinion.
All right, I want to stay on that topic. You have in your notes here, which is very clear, inflation is always caused by excessive money supply growth, as occurred during the pandemic, and never by tariffs and deportation. Talk to us about that, because I think a lot of the concern about tariffs and about deportations is that they will in fact be inflationary.
Absolutely.
You don't see that in the math?
Well, the first thing that is strange that nobody's really pointed out is it's almost like we had the perfect experiment to prove monetary theory. 75% increase in the money supply, which netted down to 60, 38% nominal GDP, 22% inflation. So it worked perfectly. So the excess monetary growth translated inflation, basically got Biden fired. So thank you, Chair Powell. But that worked perfectly, but nobody seems to care. Like that, Milton Friedman, would be dancing in the streets.
Is Chair Powell going to get Trump fired?
Yeah, quite possibly, yes.
How? What will be that process?
We have ultra tight monetary policy right now. The thing to look at is money supply growth. It's -3, so that implies deflation. In fact, we'll see about retail sales as a lagging indicator, but we think the economy is slowing.
I read Jersey out this morning with a blistering note on tightening off the Fed balance sheet as well.
Right. So the key dynamics, everybody debates, like, was monetary policy tight? when you're shrinking the money supply 3%, that's extremely tight.
Okay, let's do this. Jay Hatfield with us. We're going to come back. He's with infrastructure, capital management. We're going to stagger to a retail sales report on a Friday with Valentine. 114% are work from home today. Futures at -7, Dow futures at -105. The VIX 15.23. Don't really know what to make of it all, other than here we are with yields what they are, and retail sales matters. There's a number of lines of retail sales, and that control group is what I focus on. So let's look at that.
This is breaking news from Bloomberg.
And this is for January, month-over-month retail sales. The survey was for a decrease of 0.2%, came in a decrease of 0.9%. So you see the difference there when you take autos and gas out of the picture. It goes down to about down 0.5%. And then we want to hit import prices because we've been talking about that so much with tariffs. The expectation was for an increase of 0.4%, increased about 0.3%. Now let's see the reaction on Wall Street. A little bit of a dip. We have NASDAQ futures down 0.1%. 26 points. Dow futures down now 0.2%. S&P futures still down about 0.1%. Moving on to the bond space, we have the 2-year yield at 4.27%. That's off about 3 basis points. A 10-year yield 4.50%, and that's down about 2 basis points. Tom.
Lisa, thanks so much. Yields come in, as Lisa mentioned. On the 10-year real yield, 2.05% is in a little bit, nowhere near the 199 level. That's really my demarcation, but to 4 digits, 2.0470 on the 10-year real yield. Dollar showing further weakness on DXY, 108, 107, now 106.74. So a sort of quiescent feel there, although the revisions went up, so it's sort of a soup, to say the least. Our economic indicators and all that Lisa Mateo does on economics, it's brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve their goals. Put the power of Oppenheimer thinking into your investing, wealth management, capital markets, investment banking. Paul?
So, Jay, looking at the retail sales, again, weaker than expected here. Talk to us about your view of the Fed here. I mean, there's a concern that the Fed is chronically behind the curve because they look at historical data. How big of a problem is that for you?
That's an enormous problem. The Fed, well, they really have 3 problems, but that's the biggest.
Okay.
So as you know, because I was, I believe, leading the charge on this, but
you and Kim Harvey at Duke University.
Okay. So in early 21, because we, of course, do look at oil, that matters, and we look at other indicators of housing costs like housing prices, but now we use just market rents because there's this thing called the internet, and you can see it. Maybe the BLS should start using that. But so the Fed seems to know this, but then they're so slavishly focused on this 2%, like it's some, it came down in a tablet from God. But when we actually publish on our website, which they don't read, that if you adjust that to market, then core PCI is like 2.1 and core CPI is like 1.9. So they should be really concerned about having ultra tight monetary policy and just continuing to cut every meeting. They don't have to do an emergency cut, but they're completely off that page. They've driven the 10-year up 100 basis points and risked a recession in the housing market.
When you were at UCal Davis, did they teach the biblical Fed? Was it about tablets?
They actually did, and I think that's the big advantage because it was 45 short years ago. And monetarism used to be more popular. Now, Keynesianism, it's obviously most universities are liberal, and if you're a Keynesian, it's wonderful because all government spending is great. So I don't even hear any monetarists.
So really what is the monetarism is out of vogue? What is the part of monetarism that our listeners and viewers should pay attention to?
Well, I've looked at the monetary base every week since MO. I learned that from you, actually. It's better to call M0 or MO. So it comes out every week, so that's an advantage over M1. And if you just follow that indicator, you'll never miss a big cycle, except things like the pandemic. So in other words, we were on saying, well, the money supply went up 75%. Do we need to be geniuses that we're going to have inflation? Do we really think it's transitory? Or now, or a better example, great financial crisis, we had 0% monetary growth for 4 years before the economy blew up. Now we have 3% negative. So we would have said before, as I guess I did, that, we think retail sales lags, but we could be weak. Well, this is really weak, negative 0.8. And nobody cares about the last GDP print. It was only 2.3.
We're going to get you on before the next Fed meeting to talk about this. It's a thing from a different time and place as well on monetarism. Jay Hatfield is with infrastructure, and we thank him for that, InfraCap as well. We got the economic data out of the way, much more to come. It's Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures falling this after January retail sales came in weaker than expected with a drop of 0.9% month over month after an upwardly revised 0.7% gain in December. So let's get to it. We have NASDAQ futures, little change, down about 17. Dow futures down 0.2%, about 94 points. S&P futures, little change, down about 4. The 2-year yield at 4.27%, down 3 basis points. The yield on the 10-year, 4.48%, and that's down 4 basis points. Over to the Bloomberg Dollar Spot Index, that's down about 0.2%. We have shares of video streaming company Roku. They're up 14%. The reason why? Well, it posted a narrower than expected loss. Revenue also topped forecast. Few companies making news. TV Tokyo reporting Nippon Steel will maintain its plan to buy U.S. steel. Then we go over to Starbucks, where its CEO Brian Niccol tells Bloomberg that it plans to expand its stores in the Middle East, opening 500 stores, possibly 5,000 new jobs in the next 5 years. And finally, HSBC begin fresh job cuts at the investment bank next week. Yeah, they say it'll start in Asia, but ultimately reach employees globally. Not clear exactly how many employees. That is your Bloomberg Business Flash.
Thank you for bringing that up. Paul Sweeney and Tom Keene. Paul, they want to be like a boutique something. How does a major bank become a boutique, as they say?
I don't know. It's amazing.
I've never seen it.
No, you're right, Tom. The global investment banking business has really evolved into the 4 or 5 bulge bracket U.S. firms. That's it from having a global footprint. Everybody else is just trying to figure out what geographic niche they can be competitive in.
Munich is a place to be right now. We are monitoring a conversation and speech, I should say, the remarks of the Vice President of the United States, J.D. Vance. We'll continue to look for that for important moments that maybe go to that as Vice President Vance sees fit. This is a joy. She has kept you in the market. She is it. UBS right now, and Nadia Lovell has just been a huge value add equity strategist, global wealth management as well. And Nadia, out of the pain and agony of math and physics at Smith College, let's go there. In a 3-dimensional space, you have nailed this bull market. What's the z-axis right now that continues this bull market? What's the thing pulling it ever higher?
I think it has to go back to the fundamentals of earnings, and really that's being supported by this economy. I mean, when you think about so far this year, so many things that the market has had to confront, whether it's been DeepSeek or tariffs or even this backup that we've seen in bond yields, right? But yet this market keeps climbing higher. And I think what's nice to see, Tom, that you're seeing some rotation under the hood. You're finally seeing some participation from those cyclical, more value-tilted area of the market. And we think that that's really healthy for this bull market. But I think that there is just somewhat of a restraint on the market around tariffs. And that's restraining this market from really breaking out to the upside. So right now, we think that we're probably more in a range-bound market.
What's the cash analysis you have going into this weekend? You have the advantage of people like Paul Donovan and others at UBS, and I guess we can have a market belief, but what is Nadia Lovell's cash belief?
I think right now, I do think that you have to take some cash off the sideline when opportunities arise. You know, we saw that just a couple of weeks ago when the market did pull back on the concerns around DeepSeek. So you have to be ready to step in on those opportunities. I mean, you still can get a pretty decent yield in cash, but we think that there are better opportunities in the equity market. So keeping some dry powder for any sort of pickup in volatility, but don't be afraid to put it to work.
Nadia, don't be afraid to put it to work in the equity markets. It feels like if that's kind of the call, you have to have some confidence in the earnings power of this market, because the Fed's probably not going to be that much of a support going forward. How do you feel about earnings?
Earnings so far has been coming in for the fourth quarter earnings season has been coming in better than even now above consensus expectations. We were looking for high single digits earnings growth, and now we're seeing double digits. I mean, so far, I would say in terms of the guidance for the Q1 is a little bit softer, and I think that's reflective of the uncertainty around policy, as well as the strength that we've seen in the U.S. dollar. But when we look across some of those secular trends, there's still pretty strong earnings growth coming from tech, but you're also seeing them broaden out ex-tech to some of them like financials as well. You've even seen healthcare starting to hold in there. So I think that's going to be the story for this year, that continuing broadening out of earnings.
Right. Nadia Lovell not moving the equity market. Futures -4, but Paul, we just got a tick down in the 10-year real yield. Nadia Lovell of UBS slamming the 10-year real yield down to 2.03%.
Nadia, I know you folks over at UBS recently upgraded the healthcare space. Why?
Look, when you look at how healthcare has been traded in the last couple of years, it's one of the most beaten down, underperforming sectors. And so when you think about it from a valuation standpoint, now trading at 20% discount to the broader market, we think that now is an appropriate time to look at the sector. The sector is benefit from some of those secular trends that we're seeing in the market, whether it's weight loss drugs or robotics as well. That also could benefit from AI. I think the policy uncertainty around it, particularly post-election, will start to fade. And so we think that that's an area of the market where it's trading at a deep discount, some value to add to portfolios.
Nadia Lovell with us, the UBS. We will continue. We welcome all of you across the nation. We welcome you on YouTube in America, YouTube worldwide, particularly on the European continent. It is an annual meeting of great importance, the Munich Security Conference. The Vice President of the United States, his first sojourn across the Atlantic, speaking to the assembled right now. We'll continue to monitor Vice President Vance for headlines. Paul?
Absolutely. So talk to us, Nadia, about tech and communication services. That's been the real driver of outperformance in the market, really, for as long as most of us can remember here. Can that still be the case in 2025?
Yeah, and I think, Paul, that's a great point. We've seen some volatility in tech, but we continue to think that tech is pretty attractive. When you look at the earnings so far for the season, it's been mixed, but I think some of that has to do with the fact that there's been supply constraint within the cloud business of some of these companies just due to overall AI demand. We heard that from like the Microsofts of the world. But when you think about the amount of money that's being spent to build out AI infrastructure, we ourselves took up our CapEx expectations for the hyperscalers. And so we think that there's opportunities here to accelerate AI adoption, particularly after DeepSeek. And so we would be looking to add to the enabling layers like the semis that have been beaten down in this pullback. And we think that, but we do think, though, Tom, that you need to take more of a portfolio approach to the AI story and include the enabling, the intelligence layer, as well as the application layer.
Nadia, thank you so much. Don't be a stranger. Nadia Lovell with UBS today, senior equity strategist. And just as simple as this, she has participated actively in this bull market. How many actually have? Futures and -4. Quickly now, with our news in New York City, Michael Barr.
Thank you very much, Tom. Paul Lisa, on his first trip to Europe as U.S. Defense Secretary Pete Hegseth, took part in a series of meetings today with with his Polish counterpart, discussing continued U.S. support in the region, including ongoing support for Ukraine. During a press conference following the bilateral meeting with Poland's defense minister, Piegza stood by his previous comments that he believes Ukraine might have to give up some territory and the chance to join NATO if they want an agreement with Russia to end the war.
The reality that returning to 2014 as borders as part of a negotiated settlement is unlikely. The reality of U.S. troops in Ukraine is unlikely. The reality of Ukraine membership in NATO as a part of a negotiated settlement, unlikely.
Meanwhile, Ukrainian President Volodymyr Zelensky said he is prepared to engage with President Donald Trump's peace initiative and signaled willingness for direct talks with Russia. President Trump has ordered his administration to consider imposing reciprocal tariffs on numerous trading partners to rebalance trade relations. It could happen as soon as April. And right now, Vice President J.D. Vance is speaking at the Munich Security Conference. Going to have more on that story coming up a bit later. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Appreciate it this morning. Paul, what do you see on that tape? To me, the headline here is really a soggy dollar more than anything else.
Yeah, exactly. So, you're looking at the DXY index a little bit weaker here today. And I think looking at the retail sales, Tom, that came in weaker than expected. Bloomberg News kind of calling out the fact that you had the wildfire effect as well.
Okay, I'll go with that.
And that's kind of been impacting it a little bit as well here. And also talking about the winter weather are hurting retail sales. So those tend to be the outliers there.
Just a shout out to people providing leadership in the fire. I had the privilege yesterday of darkening the door at a small restaurant in New York called Michael's. Michael's is out in L.A., and Michael of Michael's was in New York. Okay. And he greeted me and deigned to speak to me. Nice. The fire trucks were 45 feet from his restaurant.
Wow. Yep.
And he said, there's still, the shock of it all is still there. They are by no means moving on. Michael's very strong out in Santa Monica. This is Bloomberg's Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, on Valentine's Day. Let's go to Boston. Grantham Mayo Van Otterloo. It is iconic up in Boston. Jeremy Grantham in their shop, and they're like everybody else. The vogue is ETFs. But Isabel Lee said, wait a minute, it's not China ETFs or ex-China. It's a very twisted Pacific Rim angle here. Isabel Lee writing us up with Jay-Z. Tell us, Isabel, about what Mr. Grantham is doing off the Pacific Rim.
So you're right. It's not an ex-China ETF. So it's interesting because they have an ex-China mutual fund and an EM mutual fund. And one has been around since 1993. So we were like, why didn't you launch an ETF like that? And they said because the market is saturated. And they're newcomers in the ETF space. So this Beyond China ETF to them is the novel one.
Beyond China.
It's Beyond China because it looks beyond China and where the supply chains will go when they leave China.
You have no idea, Isabel, how sophisticated this is. Paul and I remember when EM analysis is, do they have a concrete company and do they have a phone company? That was the entire debate, right, Paul? Telemex or whatever it was.
Exactly. So where does Grantham Mayo, where do they see the growth out in emerging markets outside of China?
India, Thailand, and Mexico. So their stock picking theory, they will have around 100 stocks. It's interesting. It's a three-step process. They will look at the country, then they will identify sectors and themes, then they will pick the stock. So they will have some 100 stocks. They caveat that they might hold one country more than the other, one theme more than the other, but that's their plan, and they will rebalance.
And now, folks, we go where the brave dare to go. Are they going to hedge the currency exposure? That's a huge deal.
They are sticking to stocks. They may hold ETFs, they may hold swaps, but for now they're just really. I think they're trying to keep it simple. This is only their 5th ETF, so they're what we call a newcomer in this space. But their first ETF was highly successful, 1.6 billion.
Yeah.
The second, third, and fourth were not quite. So maybe this 5th one, hopefully it'll be as successful as the first.
Isabel Lee, one final question. You're in the trenches on this every day. From where you sit, what is the character of this bull market? When you sum up what you and 15 other people are doing, frankly, worldwide in equities here, what's the nature of this bull market that you see?
I think it's fragile. I've received a lot of notes the other day talking about market fragility. And I think retail investors are really who are piling in. When it comes to ETF and to stocks,
what are the hedge funds
really
doing?
Retail. They're also piling in, actually. We have Goldman Sachs, Rubner saying that. So everyone is just bullish. Makes you think, do macroeconomics, politics, uncertainty, do they even matter? Because why listen to those when everything's just going up, at least in equities?
I mean, Paul, it's like everybody's piling in. Do you feel the exuberance out there?
I'm not sure I do, but I think one of the themes that I found interesting over the last couple of months, 3 months, 4 months, is people talking about, strategists talking about international money coming into the U.S. for no other reason than that's really the only thing that's working. Although some of the European markets have had a good, strong start.
If the Grantham other ETFs, have they been successful? I mean, are they on the edge of BlackRock?
Far from it.
That's a joke,
but they're
Isabel.
Getting there.
Stay with me. It's theater on a Friday.
But Tom, how about you think about Grantham Mayo, crusty New England, Boston
but you
money.
should see their seats at Fenway.
And now they're getting into the ETF business. I mean, it just shows you that
everyone.
They capitulated.
But this is important. Great point, Paul. Isabel, the reality is ETF or die, right? Yeah. I mean, that's basically what we're talking.
Yes. It's also a chance to attract new money because their minimum for most of their mutual funds is 1 million. Not everyone has 1 million.
Okay. There's some news you could use today. Isabel Lee, not everyone has 1 million. Isabel Lee, thank you so much. It's an important essay here on China and beyond China with Grantham Mayo of Boston. We welcome all of you across the country. Of course, it's Valentine's Day. Lisa Mateo giving great direction to our songs. We got Teary-Eyed with Elvis. Let's get more teary-eyed now. Happy Valentine's Day.
I'm looking for a man in finance, trust fund, 6'5", blue eyes, finance, trust fund, 6'5", blue eyes, finance, trust fund, 6'5", blue eyes, finance, trust fund, 6'5". I'm looking for a man in finance. I'm looking for a man in finance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr. Good Valentine's to you across the nation. I figured it out 2 p.m. yesterday. It was Valentine's Day. A little late there.
Still, though, it counts.
Big Apple florist laughed at me. They said, not a chance. We're looking for a Saturday delivery.
Surge pricing there.
Yeah.
You want to get a rose today? Yes. Good luck.
Pharaoh's in charge of that.
Okay.
No one spends more money in Manhattan than on roses than John Farrow.
Really?
No one.
Oh, good.
He top ticks it every year. He's got like the 24 roses, and he's a player. He's figures it out. Futures at -3, Dow futures at -64. Has it been a good day? Yardeni?
Yeah,
Katy
solid.
Kaminsky? Lindsey Piegza coming up.
In studio.
Wow. With inflation going in her direction. This will be an important conversation. We'll do that here in a moment. Bloomberg surveillance brought to you by IBKR with a year-over-year change in U.S. PPI, the business inflation, U.S. PPI. Will it exceed 3% in February of this year? At IBKR Forecast Trader, the yes was recently at 39%. What's your take? Trade your prediction at ibkr.com/forecast. And now with a Bloomberg Business Flash, Lisa Mateo.
And we've got futures pretty much treading water this morning. This is after new data showed consumers pulled back after the holidays. U.S. retail sales, they dropped by the most in 2 years. And this was during a time severe winter weather, wildfires in Los Angeles. We go to the NASDAQ right now. Little change, down about 6 points. Dow futures down about 59 points, and S&P futures down about 2. The 2-year yield, 4.26%, down 4 basis points. The yield on the 10-year, 4.47%, and that's down 6 basis points. We move over to the Bloomberg Dollar Spot Index, down 0.3%. To earnings we go. Moderna recorded another quarterly loss. Vaccine sales, they fell too. The shares fell as much as 8%, now down about 4%. Airbnb, their shares up 14%. Issued an upbeat forecast for the first 3 months of 2025, and that column follows along with their strong holiday travel season. Coinbase, they reported a surge in quarterly revenue and profit. Shares, though, they're down more than 1% after they rallied 8% yesterday ahead of those results before they came out. And sticking with crypto, Bitcoin, CNBC reporting GameStop concerning investing in Bitcoin and other cryptocurrencies. Their shares up about 7%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. And now let me explain why this is important. Lindsey Piegza was my Economist of the Year last year. Wow. There's other people that have got it right. Forget about disinflation. There's going to be a sticky inflation. Alarian out front on this. Jim Bianco was out front on this. But no one wrote week after week after week intelligently about this like Dr. Piegza. She darkens the door of the studio today. She is with Stifel Financial. Lindsey, again, congratulations, because the data that we saw this week clearly alludes to your tone. And I got Richard Clarida in the FT saying disinflation tendency is place. Edward Yardeni in the 7 o'clock hour says the disinflationary tendency is in place. Is the disinflationary tendency in place?
Well, the data doesn't seem to suggest that. The data suggests that we did have strong disinflation, but as of last year, that trend now remains increasingly uncertain, with many of these key metrics moving to the sideways, and more recently, we've seen an acceleration.
Right.
With the PPI, the CPI accelerating for the past 3-4 months, some of these underlying key metrics more than double the Fed's intended target. That doesn't give me or Fed officials much confidence that we're going to reinstate that disinflationary trend.
I saw auto insurance up 11%. You're in the wheelhouse of this in the Midwest. There's a cottage industry, Dallas, Chicago, Cleveland, of taking the 78 things or whatever that make up inflation. I want to pick out this. I want to pick out that. I want to pick out this other thing as well. Paul and my viewers and listeners hate that because they're paying the bills.
Correct.
What are people feeling away from the contrived CPI series?
Well, if we look at this morning's retail sales numbers, we know exactly how consumers are feeling. Even if we parse out some of the weather effects or some of the effects from the fires that we saw in the recent times, what we're seeing is consumers responding to the ongoing burden of elevated prices, and that's forcing somewhat of a pullback in expenditures. Now, again, this isn't an end-all. We have seen consumers spending at a relatively resilient, relatively robust pace, to be honest, for the past several months. But that burden of higher prices is forcing a slowdown in the pace of consumption for consumers, and that's going to be a big challenge for top-line GDP, as we know the consumer is the backbone to the economy.
So if I'm the Federal Reserve, do I stick with you could argue this data suggests that maybe they should, in fact, be thinking about cutting rates, and maybe that whole discussion of maybe lifting rates, that's completely off the table. How do you think the Fed is going to interpret this retail sales data?
I think the Fed is looking at the data coupled with the hotter than expected reads on CPI and PPI, saying we need to be firmly positioned on the sideline to allow the data to further evolve, give us time to assess the data and assess the impact of the incoming fiscal policies that are coming down the pipeline. So the Fed wants to take its time, be patient, and as Chair Powell has said, they are in no rush to move policy at this point. Remember, they've already made a series of policy mistakes along the way. They were late to the inflation taming party on the front end. They didn't raise rates high enough on the back end. Now what we're stuck with is stubbornly elevated inflation and rising fears of potentially emerging weakness on the consumer side or in the labor market.
I'm going to let you pick 6 months, 12 months, whatever your duration is. Real GDP and nominal GDP. And does that allow central banker to the world, Donald Trump, to get his low-rate regime? I mean, where are you on real and nominal?
No, I think it's going to be very difficult for the administration to see a realized reduction in rates as they would like to see. Now, that's nothing against the current administration.
Wrapped around what? Buoyant, solid, real GDP?
I think real GDP is sub 1% for the next 12 to 18 months. I think that's going to be very difficult to get above when we look at these still elevated inflation levels and we see this loss of momentum, a clear loss of momentum in
nominal
consumption.
Under, I've never said this, Paul. Nominal under 4%?
Nominal under 4%.
Oh, you're killing me.
It's not necessarily a rosy outlook, but I think it's a realistic outlook that we have to contend with.
Can the Red Sox win this year? Can they take the pennant?
I wouldn't be able to speak intelligently about that. But
you are talking sub 4 nominal.
I think it's a realistic
sub 1%
risk.
GDP.
Tom, that's why I'm so concerned about stagflation. This Fed is so concerned about avoiding negative growth that they're willing to tolerate above target inflation for a prolonged period of time, eventually choking off the upside potential for the economy.
Extrapolate. I mean, we're just among, nobody's listening today. It's Valentine's Day. You wear Cubs blue. Thank you. Lindsey, if you get that scenario, what does that do to non-farm payrolls or the unemployment rate?
Well, we've already seen non-farm payrolls lose momentum over the past couple of years. We're talking about an average pace of 166 since the start of last year. So if we continue to see this erosion in the upside potential of the economy, I think we get closer to 120, 130 on a monthly basis. That drives the unemployment rate up into that range of full employment, as the Fed has been looking at for quite some time. And that gives them somewhat of a more stable labor market. We're not concerned about overheating, but it does perpetuate.
I don't agree. Vice Chairman Trump, Paul, is going to go mental. That's what's going to happen.
Well, are you concerned about these inflation risks that may or may not come from tariffs and from change in immigration policy? We had a guest on earlier today say that's not the problem. The problem's always just money supply. Don't worry about the tariffs and things like that. Do you worry about the tariffs?
I'm concerned about the already ingrained level of inflation in the economy. That's my primary concern. The implementation or the use of tariffs to negotiate better trade deals, to negotiate cooperation in international conflicts, or to cooperate in terms of more stringent immigration rules, that's where I think the administration is ultimately headed.
Okay.
So I think the most dire scenario of 40, 60% tariffs being implemented, that's really off the table. I think a more realistic scenario is a much more diluted or muted scenario.
So what's your, you're not doing a fixed income ballet, but what's your fixed income regime here? Do you see a 10-year real yield peaking out 2.20, comes down to 199, right now 203. Are you looking for the real yield to just completely break down to like a 170?
Not entirely, because remember, the things that are going to keep the longer end of the curve elevated is this wake-up call that investors have been having.
Deficit,
exactly, about $34 trillion in debt, a deficit pushing up to 7%, double the historic normal. So I do think that investors, they have pushed that to the wayside, and they pushed it to the wayside last year amid the notion of the Fed eventually cutting rates. But if the downside potential for monetary policy is essentially stalled, and we see fiscal policy continue to expand the balance sheet, I think that's going to provide a very solid floor to longer-term rates.
So when we see a retail sales data points like today that are significantly weaker than expected, is that a one-off fires or winter weather, which I hate using the weather, but a lot of people do, including every retail analyst out there. Is that a one-off, or is that something that we should really be concerned about, do you think?
Well, I think we can explain away a lot of the weakness because of the weather, because of the fires. But I think it's also reflective of this underlying pressure, as we talked about, because of this rising and elevated rate environment, cost environment for consumers. I think it's also a reflection of consumers' uncertainty about what is coming down the pipeline. And we saw that reflective in consumer confidence taking a sizable dip at the start of the year. So consumers understand that right now their financial footing is very much a question mark. And that's playing into their near-term decisions of expenditures and their confidence for the longer run.
Forget about the Piegza theater of a sub 1% real GDP. Let's go halfway there. We get to 1.7% real GDP for some quarter that's out there somewhere. When do they cut rates? That's got to be almost not a force majeure, but it's almost right now I would say in the framework of people, it's almost a crisis to get a 1.7 statistic.
But it's important to understand the motivation behind the rate cuts. Because I think at this point, when we look at the Fed's motivation early on, it was to counteract the fear of emerging weakness in the labor market, which failed to materialize, as well as a desire to pass through as much relief as possible before the uncertainty of the new fiscal policy agenda was coming into play. Now the motivation shifts to simply diverting policy from still firm territory back towards neutral as the economy normalizes.
I mean, Paul, what are we going to do with a 1.7% real GDP and the mortgage rate 7%?
Coming down.
Tell me what the housing market does.
Yeah, that's going to be a challenge right there. Lindsey, talk to us about inflation and when do we stop complaining about inflation? When do we say my price of
when
cornflakes
it comes down?
But my price of cornflakes is 20% higher than it was before the pandemic. But it's been there for 3-4 years now. When do I stop complaining about that jump in my price of cornflakes and say, oh, it's only up 2% year over year?
Well, I think we actually did see that over the past couple of years, this expectation of consistent monthly increases of 0.2, 0.3, even 0.4 to your point. But I do think at this turn of the road, consumers have reached a precipice where they're going to be increasingly unable to continue to foot that consistent price increase. And that's where it's starting to weigh now on these shopping decisions, on these consumption decisions, on consumer confidence. Remember, consumers have been increasingly reliant on buy now, pay later options, but that only lasts for so long. With credit card balances at $1.2 trillion, delinquencies are starting to tick higher. Now, not meaningfully so. I think when we look at the vulnerabilities of the household balance sheet, they're still relatively moderate, but we're starting to see indications of, again, that emerging profound weakness.
This is really profound. I mean, this is really, really a good conversation, folks. To summarize, Lindsey Piegza is looking for real GDP really to come in, inflation to be a little slower, stagflation in order. Good morning, Professor Summers. If we start with any central bank as ex post, and you've nailed this, how ex post is Jerome Powell, particularly given White House pressures?
Well, remember,
I'm looking for a rate cut call. Can I get one? It's Valentine's Day. Give me a gift.
I think right now the Fed still is desperately trying to provide additional relief, but they're only going to be able to do that if they see inflation arrest this upward trend. They don't even need to see inflation resume the disinflationary trend. They just need to be convinced that we're going to continue to move sideways with no further upward pressure, and or we see sizable indications of emerging weakness in the labor market. But we need one or both of those scenarios in order to justify an additional rate cut. Now, will we see significant rate reductions under that scenario? Likely no. One, at most two. But again, that is further justified as policy remains in firm territory, and we want to get back towards neutral.
All right, Lindsey, it's pitchers and catchers. Baseball season's back. Can I ask you a Chicago question? You're a Chicago native.
Absolutely.
Cubs, White Sox. What determines whether you're a Cubs fan or a White Sox fan? Is it simply geography?
It is geography. It's proximity. Yes, it's where you live if you're on the north side versus the south side.
And so how does that work out for us? You're north side, you're a what fan?
If you're on the north side, you're typically a Cubs fan. On the south side, you typically root for the White Sox.
Really?
Yes.
It's not like handed down. Like here,
No.
Mets, Yankees, I think it's kind of who your parents are. And how they
there
raise
may
you.
be some of that over the generations,
more
but the hard
geography
line
there.
is typically designated towards
See,
the geographical.
I don't have a great feel for Chicago. I love Chicago. I don't have a good feel for what drives kind of those things. So I'm glad you cleared that up for us. See, Tom?
Lindsey Piegza, thank you so much. Really thought-provoking. We can't say enough from
Economics and
Stifel
baseball.
Is well. The vice president is speaking in Munich, and some of it's choreographed and written and all that. He's done now. Ian Bremmer has out one of his quotes from Vice President Vance: "If Americans can survive 10 years of Greta Thunberg, you guys, Europe, can survive a few months of Elon Musk." Some of the spirit we have captured from Mr. Vance's speech. He's been fiery lecturing at Munich. We'll see how the rest of his day goes in Germany. Right now, with our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Just as you mentioned, Vice President J.D. Vance just addressed the Munich Security Conference. Vance talked about security in Europe.
The threat that I worry the most about vis-a-vis Europe is not Russia, it's not China, it's not any other external actor. And what I worry about is the threat from within.
Meanwhile, President Trump's phone call this week with Russian President Vladimir Putin is dominating the discussion at the Munich Security Conference. Bloomberg's Oliver Crook is there.
You have world leaders, you have everybody at the sort of EU Commission level, you have CEOs, not just of defense companies, of all the companies around Europe. They've all come here to hear it straight from the horse's mouth, and potentially this new regime of foreign policy from the United States that the Europeans are slowly waking up to and figuring out basically how they're going to have to deal with it.
Bloomberg's Oliver Crook at the Munich Security Conference. Robert F. Kennedy Jr. is officially President Trump's new Secretary of Health and Human Services. He was sworn in yesterday in the Oval Office after the Senate confirmed him on a 52-48 vote earlier in the day. President Trump.
He's a fierce advocate for the health of our children and for the values of free speech, democracy, and peace.
Mitch McConnell of Kentucky, the former Senate Majority Leader, was the only Republican to vote against Kennedy. Pope Francis is being hospitalized to treat bronchitis and undergo some necessary diagnostic tests. The Vatican confirmed the latest issues with the 88-year-old's Pope health. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. It's almost quoting from Eric Clapton here. There's a new sheriff in town.
Yeah, exactly.
Said Mr. Vance.
Yep, exactly right.
Europe.
So I was just kind of reading some of the top live Bloomberg News reporting.
Ben
on
Sills on it. Yeah,
yeah, exactly. So, it was more of just kind of, wasn't really addressing some of the key issues regarding tariffs, trade wars, Russian aggression against Ukraine. It was more focused on social media, free speech, and the Vice President's notions of democracy.
And Chad Thomas, who's joined us from time to time, driving all sorts of our European coverage. And this is a quote from Mr. Thomas. "Returning to Vance's speech, it really was a lecture." So that sort of captures the tone there as well. Our political team will have much more on that, including Balance of Power with Joe Matthew and Kaylee Lyons. Look for that here, 12 noonish as well. What do you have today? I mean, what are you doing at 10 o'clock here? We're getting out to the Paul Sweeney hour.
We
do
got
you
Alex
have Matthew
Steele.
Miller?
We get Alex Steele. She's out today. Isabel Lee will be sitting in the 10 o'clock
wonderful.
hour. She's our cross-asset reporter. We heard from her
Just
earlier
heard from
today.
her in China.
And again, we are in discussion, Tom, with Matt Miller's people to see if maybe we can grab him after his TV gig, maybe get him for the 11 o'clock hour, in which case there may be some automobile discussions there. I don't know.
Oh, we'll see. Well, he's got, and his
crypto.
podcast is really doing well.
Yeah.
His auto podcast.
Yep. With Hannah Elliott, who is based out there on the West Coast, and all she does is tour the globe and do really cool things, often involving exotic automobiles around the world.
What are the New York Giants worth?
I don't know. The reports from Forbes are like a little bit north of $7 billion. Whatever that number is, I'm going to ratchet it up another 10 or 20% because it just seems to be what happens out there. If
they were $7 billion, as mediocre as they've been, can you imagine? Like if they make the playoffs 3 years in a row?
Yeah, it's the New York market here, the number one market. So it's just going to be huge. And the Mara family and the Tisch family, they can sell up to 10% to private equity.
All the other teams can do the same thing.
Yes, and that's a new rule from the NFL, and that brings in a whole new pot of money to drive valuations yet even higher.
Before the Bregman trade, the Red Sox, they were not bringing in 10% sale. They were paying people to bring in 10%.
Maybe they'll be back.
Things have changed. You know, Al, it's a whole new world after all. We'll have to see on that. Right now, futures flat on a Friday.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the percentage of U.S. experiencing drought conditions exceed 18% on 2/18/25? At IBKR Forecast Trader, the yes, recently at 35%. What's your take? Trade your prediction at IBKR.com/forecast. All right, more economic data out today, and it brings in a higher than expected drop in January retail sales. 9 of the 13 categories posted decreases, including motor vehicles, sporting goods, and furniture stores. Let's get to futures right now. Right now, little movement in NASDAQ futures, maybe down about a point. Dow futures down 28 points. S&P futures up just a point. 2-year yield, 4.25%, down 5 basis points. The yield on the 10-year, 4.46%. That's down 6 basis points. The Bloomberg Dollar Spot Index down about 0.3%. This morning, Tesla leading the gains for the Mag 7. Shares up about 1.5%. Then we go to Wynn Resorts, rising about 3%. It reported a beat on fourth quarter adjusted earnings per share. Analysts are pointing to strong performances in Macau and also Las Vegas. And finally, DraftKings, they're up 5%. Quarterly results, they missed, but it did raise its guidance for 2025 revenue, and that's why those shares are higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Paul Sweeney and Tom Keene here to get the market open in 4 minutes. We'll go back to Lisa for a little bit of the Friday ballet. We've got a really interesting and well-timed group of people today. Lindsey Piegza there was just shocking from Stifel on a call looking for sub 2% GDP, real GDP out there. And she even talked about a low 4%, sub 4% nominal GDP. We're going to shift here to someone, as we had Tina Fordham in, I believe it was yesterday or the day before, hugely qualified on transatlantic tensions, and all of this was gone. Is Ethan Devitt monitors Munich. She is senior family office strategist at Moneta Group, but is very much interested in the political and market and investment tensions across the Atlantic. Ethan, how important is this Munich conference to the confidence and the agreement of the people of continental Europe?
Well, I'd say we're looking with a lot of factors right now. We know that Europe is in the crosshairs now of the Trump administration's positioning on tariffs. It cycled from Canada and Mexico, a stay of execution there, focusing on Europe, claiming that even the value-added tax is, hostile behavior around the U.S. So we know that the European economies will all take a hit from tariffs. They're already on pretty fragile ground. So it's important to show solidarity and partnership. Right. They know they need to capture some of the deregulation and innovation that the U.S. is showing.
A completely unfair question, but I'm going to go there because you're so darn good. And that is David McCullough, in his classic book, The Great Journey, about Americans in Paris, makes clear that after the horrific battles of 1870 and 1871, the American tourist saved France. Everybody went over in 1872, whatever, and that input of money and tourism from America picked France off its battles and its wars. Do they risk here losing the American impulse if these tensions get so great?
I don't see that. Certainly not as far as the modern American tourist. We know that is saved Italy, saved the luxury hotel sector of Rome. We know that the American tourists are extremely excited to use their strong dollar across Barcelona, across Lisbon. So I don't see that particular tension. And nor do I see the tensions really exploding that much in terms of geopolitical and trade tensions. We know that there's a lot of solidarity shown between US and European leaders. There may be tensions at times, but for the most part, we're headed in the right direction with our democracies, or the same direction, certainly. And I think, now we can only see that this peace overture around Russia-Ukraine has actually boosted European stocks just in the course of one day. So we know the extent of the discount, perhaps, that those stocks have been trading under. So I'm pretty sanguine about Europe-US relations going forward. They've had their own fair share of abnormality in terms of geopolitics in Europe. I think that has therefore led them to know what to expect a little bit more when it comes to the second Trump administration.
Yeah, if Devitt with us here, we're going to get the markets open and go back to her with these really, comforting words. I want to review here, folks. It's sort of like in The Graduate where somebody whispers in somebody's ear, plastics. Paul Sweeney whispered in my ear back a couple years, Tom, the DAX. You said, climb on board the DAX, the roulette wheel of the equity markets in Germany and all of Europe. Paul, when you said that to me, it's up 82% or 31% per year.
Yeah.
Germany's flat on its back. And the DAX is a moonshot.
Yeah, it is. It kind of defies expectations a little bit here because you are concerned about Germany's economy as it relates to its dependence upon Russian oil as a source, low-cost energy, plus their reliance upon exports to China.
The exports is a key thing in the multinational sense of it. But I'm telling you, Germany, an absolute moonshot. We need to get the markets open here with red on the screen. The VIX, 15.03. Here, Lisa Mateo.
Yeah, and after a wild week jam-packed with so many things, it'll be interesting to see how we end off the week. Let's start with the S&P 500 right now. Not much movement in the markets. Up about 2 points, 6,117, though. I want to point that out. The Dow, little changed, down about 8 points, 44,702. The NASDAQ, little changed, up about 10, 19,957. The two-year yield, 4.25%, down 5 basis points. The yield on the 10-year, 4.46%, down 6 basis points. Have to point out COMEX Gold, because nearing a record $2,946 an ounce. We have Brent crude at $75 a barrel. And quick look at currencies. We have the Bloomberg Dollar Spot Index down about 0.3%. That is your Bloomberg opening bell report. Paul and Tom.
Lisa, thanks so much. Ethan Devitt with us with Monetti here right now. Ethan, what part of the equity market attracts you? Like, which part is the opportunity to the end of the year?
Well, that's still quite a long way to run till the end of the year. But in terms of, I'm still attracted. I'm going to maybe be slightly contrarian. I won't be the whisper in your ear around the DAX, but I do think that if we look at the non-US markets, there's such a valuation disparity. I'm beginning to see, especially with perhaps resolution around Russia-Ukraine, I do see and some green shoots being shown across the economy there, that could then start to revert to the mean somewhat with the US markets. So still interested in maintaining some non-US exposure. Within the US, I'm going to say that I see the momentum squarely still around the large tech stocks, that they are no longer risky stocks, they are safety stocks, and that's how markets are behaving. We know they have the spending power, we know they have the cash on hand to stay the course, keep their margins solid, and they're just in a very robust position. So I would stay pretty well according to the market split in terms of cap size at the moment, and not necessarily be trying to game the value stock rotation.
Ethan, how about on the fixed income world here? I mean, investors are now getting real coupon, real carry. Where do you recommend folks allocate to fixed income?
Well, we try not to get them to time duration too much. We know that investment grade spreads are tight. We know that that's not historically a great time to enter that area. But still, fixed income with the rates you mentioned and the way the 10-year is moving, it's still, if inflation stays where it is, it's still a meaningful real return. We've started to look at tips a lot more closely, given that inflation could be perhaps surprised on the upside, and we find the returns on tips quite attractive today. So I'd say that would be some areas in terms of fixed income. But again, you cannot sacrifice growth. Fixed income is not going to be a substitute for growth assets anytime soon. It's going to be volatile. And after inflation, the returns are going to be still somewhat anemic in relative terms.
Ethan, thank you so much, particularly those comments on the Munich Security Conference. Ethan Devitt is with Moneta Group this morning. Paul Sweeney back from the tundra. Thrilled that he's here. Did you watch the Super Bowl? Were you able to?
Yeah, absolutely.
Did they have electricity?
Sure, they did. Yeah, it was all
they
good.
had electricity.
Yep, all good. So
record ratings.
Record ratings.
What do you? Does it count when you blend in everything else?
Sure, it does, because they sell against Fox getting upwards of $7 or $8 million for a 30-second spot there, which is
but you
just
only see
extraordinary.
that on TV. You don't see that on all the tangential stuff, right?
So they had and so those other channels, they monetized it as well, but it's just, the number of I think it's 127, 128 million people kind of tuned in, which is just extraordinary. But it's consistent with what we've seen really since the beginning. Live sports, particularly the NFL, are still dominant advertising.
And you see the other sports struggling, like hockey with, we're not doing the All-Star game, it's boring, and they've got this contrived nations thing we're doing right now. How about the NBA? Barry Ritholtz was in while you were gone.
Yep.
Rockstar seats courtside, him and the LA Lakers.
Yep.
And he was really saying the NBA is very aware of the NFL's success. What does the NBA do? What would you suggest?
Well, I think the NBA is in great shape.
Really?
Because they have, again, like the NFL, they have multiple broadcast partners. Digital, these big technology companies are also going to get into the NBA. And one thing that the NBA does, I think, better than anybody is they just promote stars, individual stars, whether it's LeBron James or whomever, and that's really a big driver of that. And I think the next big leg for the NBA is going to be international, global, really going to take it global.
Like teams global?
Maybe, but certainly a lot of games global, just like the NFL has gone global.
Put the teams on the plane.
Yeah, sure.
Paul Sweeney, thank you so much. Tom Keene and Paul Sweeney, red and green in the screen. The VIX, wow, 15.00. I need a 14 print on the VIX. Maybe I'll get it here in a moment. It's Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got little movement in stocks. The bond market getting a boost, and this is after weaker than expected reading on retail sales for January. Well, it gave a little bit of a lift to bets on the Fed cutting rates. Money markets now pricing in around 40 basis points of Fed cuts in 2025. We'll start with the Nasdaq, up about 7 points. The Dow down about a point. The S&P 500 up about 4 points. We have the 2-year yield at 4.26%, down 4 basis points. The yield on the 10-year 4.47%. That's down about 5 basis points. The Bloomberg Dollar Spot Index down about 0.3%, and we have Bitcoin up nearly 1% at just over 97,000. Shares of Applied Materials, well, they're sinking. A lukewarm forecast that shares down more than 4.5%. Intel headed toward its best week since at least 1982. Its shares up more than 3.5%. Then you have Roku shares. They're soaring up 13%. It posted a narrower than expected loss. Revenue topped estimates. And finally, Airbnb. It swung to a profit last quarter. Revenue topped expectations. Airbnb up more than 12%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We are waiting in Munich for the strategic investment, the future of U.S.-Ukraine security cooperation. The room in Munich is clearing right now, setting it up for Francine Lacroix, and we will see how that goes. We have reports that people will be speaking in their native language. Lisa Mateo will be translating the Ukrainian. I'm kidding. But we will bring it to you and certainly bring you the headlines as Francine Lacroix speaks to Mr. Zelensky and I believe other worthies as well. Red and green on the screen now. SPX up fractional 4 points. Very importantly, the VIX descends down to 14.98. That's, to me, the surprise of the day. The 10-year real yield, 2.03%. Paul Sweeney looking at in 5 basis points. A Sweeney 2-year, 4.26%. Dollar weaker. Lauren Seidel-Baker joins us right now, economist at ITR Economics, with a wonderful dovetail. One of the coolest double majors out there in economics and religion, from Wellesley College, just outside Boston. Lauren, what's the religion of the Fed right now?
If you don't know what to do with interest rate policy, just pray about it. That's where that major comes into effect.
I think the prayer part is really apt as well. They're waiting for the job market to break. They're waiting for inflation to break. It's not. Do they have an underlying theory, or are they completely data dependent?
Well, they say they're data dependent. I would say there are a lot of theories out there, but how we typically see the Fed implement policy, it doesn't tend to be leading, right? The bond market is looking ahead to inflation. They have a very clear set of expectations. The Fed, I think, is a little bit behind the 8 ball on that front. They're waiting to see. So I'm not surprised to see them sitting on the sidelines, especially with data coming out like we saw this week, those weaker than expected retail sales numbers. Now, a lot of that, I think, is going to be taken with a grain of salt. We had a few one-offs that probably influenced those January numbers, but inflation's starting to heat up. I personally, our firm, ITR Economics, we do expect inflation to be mounting, especially in the second half of this year. So the Fed doesn't want to cut too much too deep and then be behind on inflation again.
In your model, in your work at your firm at ITR Economics, Lauren, what is driving that maybe a little bit stronger inflation out there?
There are multiple things. So on the one hand, we have tariffs. That's going to be an upside risk if we get, say, mass deportations, right? Take a few million workers out of the labor force. That's going to be upside pressure on wage inflation. But we also see fundamentals that have been baked into the numbers for a couple of years now. Things like money supply starting to resurge. We see gross treasury issuance. If you just look at the liquidity that is out there, these fundamental factors, they're not the glamorous headlines of tariffs and of these political back and forths, but those fundamentals, we have seen the data come through. They're showing us that inflation will be mounting the tail end of this year and in 2026.
Lauren, stay with us right now. We're looking to Munich, where literally huddled around a panel with our Francine Lacroix is a set of United States and Ukrainian worthies. The senator from the Carolinas, Mr. Graham, Mr. Cornyn of Texas as well. Senator Jeanne Shaheen of New Hampshire is part of this panel. And of course, Mr. Zelensky of Ukraine. We're trying to figure out here in New York the languages. It's been back and forth, all in English with translation, maybe not. A rumor is Senator Cornyn of Texas will speak in English.
Okay.
We got that. We got that nailed. But this is very fluid right now, and of course of extreme importance to those in diplomacy and international relations. Mr. Zelensky is speaking now, and we'll get further word of if we'll take any of this, but we will certainly monitor the headlines from Chad Thomas and our Bloomberg team. Let us now go and listen a bit in Munich.
President of Ukraine. If I'm signing something, I know everything. Yes.
That's a very good starting point.
Okay, I will explain with some details. Maybe in Ukrainian, I think it will be more necessary not to make some mistakes, which can be some details, I think, which are very, very necessary. Тобто сьогодні не йдеться про мирну угоду. Can you use?
Okay, they're working on the translation. This is live radio, folks, and on YouTube as well. Very live. We're figuring it out. We're going to monitor this with our Francine Lacroix, with the 3 senators from the United States and Mr. Zelensky, and we'll give you this a huge packed room here for this important meeting, made more important by the telephone call between Mr. Trump and Mr. Putin in the recent days. We continue with Lauren Seidel-Baker, economist at ITR. Lauren, for the American economy, how do you digest all this international relations? Is it a distraction? Is it something to ignore? Or do you fold it into where we are a year from now?
Please.
Our expectations for defense spending. But at the end of the day, if we do see these tensions heat up, that is another factor that will be inflationary. We saw that with the first wave of the invasion of Ukraine. Huge impact on commodity prices. Now, goods inflation, commodity prices have been a little bit more contained in recent years. So that could be an upside risk if things do heat up.
Lauren, we saw the retail sales number today, weaker across the board here. A lot of folks are saying it's not a trend, perhaps, the fires in California, some other winter weather. How do you view the consumer right here?
The consumer is very strong. I think even more so than the snowstorms and the fires in California, we saw pull forward. Everyone knew tariffs were coming. As soon as Trump was elected, they wanted to make any of those big ticket purchases before prices reflected that tariff being imposed. So we had several strong months in the tail end of 2024, a little bit hotter than expected. So I think this was just a little reciprocal pressure, a little bit of normalization from all of that front running. Now, going forward, the tight labor market, that is supporting wages. That's supporting real incomes. Inflation-adjusted incomes are still on the rise. So our consumer, even though they like to complain about how high inflation is, complain about the price of eggs at the grocery store, they're actually in a better position. They can still support this spending.
Lauren, thank you so much for the news flow this morning. We've shorted you. Let's get you on again soon. I really want to talk to you about the real GDP call forward. Lauren Seidel-Baker with ITR, thank you so much for joining us this morning. Again, a busy Friday suddenly here. Red and green on the screen churning. And the headline for those of you in the equity market is VIX under 15. This is a bull market statistic of 14.97. On the VIX. Stasis and yields off of a weak retail, relatively weak retail report, 2.03%, and the 10-year real yield. Paul, I'm waiting to see the Sweeney $69 on West Texas. I'm not there yet.
No, not there yet. But again, a lot of folks believe that this Trump administration will be, very, I guess, better for the big energy, allowing more drilling, and that could, in fact, put downward pressure on WTI.
And we've had conversations here, including with Jay Hatfield today, saying where's the incentive for more drilling?
Yeah.
The
energy companies, to their benefit, have been true to their word. They're not drill, baby, drill. They're all about maximizing return to shareholders, whether that's dividends, buybacks, as opposed to spending that incremental dollar of free cash flow.
Into next week to look at the economic data. It's a full week with a lot of housing data, housing starts, building permits, and that. On to Thursday, jobless claims. Of course, Fed minutes. Sweeney will read them. I won't. The Fed meetings minutes will be there. Initial claims, of course, on Thursday, and then we go on to important Michigan current conditions, and really quite important, actually, the Michigan 1-year and 5 to 10-year inflation guesstimates. They have been more than important. A little bit more of a sprightly tape off of a quiet Friday. Picking up here as well. Bitcoin up $1,000, 97,000. It's Bloomberg. And we say good morning to all of you in Munich now.
You're
Francine
listening to
Lacroix.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
There it is. We had an overlay there of vocals. This is what happens when you're making it up on radio. Francine Lacroix in Munich, the security conference right now with an important panel, including senators from the United States. And Mr. Zelensky, let us listen to the leader of Ukraine.
Не всіх поміняв, ще не всіх нам видав. Ми були б щасливі, якщо це перший крок був такий зроблений більше хлопцями повернули до їх родин. Це дуже важливо було для нас.
Well, he's coming in and out of translation for the audience. So right now he's in Ukrainian. We asked Lisa Mateo to translate this for us, but it's Valentine's Day, so she said no. Mr. Zelensky speaking out in Ukrainian with the senator from New Hampshire, Shaheen Graham of the Carolinas, and another senator as well. Again, at the Munich Security Conference, all of this pretty routine until 2 days ago. And one phone call, this with the President of the United States and Mr. Putin in Russia changed all of this debate, where this becomes a worldwide conversation. And Paul Sweeney, as we observe Francine Lacroix,
and other countries might use that as a role model. It's a precedent that is created. Now, of course, it's a complex issue. The entire conflict itself is very complex, but I think we quickly have to tackle these issues because, in particular, on our continent, on the African continent, this can set a precedent that can lead to more instability.
We welcome all of you to Bloomberg Surveillance. A bit of technical exercise there and confusion in Munich. There are multiple panels going on of importance now, and particularly important for all of you in America watching and listening. This is Francine Lacroix of Bloomberg with 3 senators from the United States. Speaking now, Senator Graham, also with Mr. Zelensky, and we'll continue to monitor this. Chad Thomas leading our print coverage in Munich. With green on the screen, we could say today we are produced by Richard Truman from New York City. This is Bloomberg.